Yeah, I got money on my phone and money on me. I got all these hoes, but still lonely. They been blowing on that strong, but still so weak. I've been higher than a drone, but still low-key. We been sitting on the floor, they in the nosebleeds. Lately I've been in control, they can't control me. Yeah, they about to get exposed for being so cheap. I've been sticking to the code and I ain't gon' cheat. Yo, grew my hair and took the grill out. Think it's time to put it back in. Trying to get into that big house, turn the crib into the mansion. Needed something with that big bounce. You know I had to hit Jackson. Aaron Rodgers with the quick routes. How much the gang we packing? We on the field at Lambo. Might peel in a Lambo. Running drills in my camo. They know what the M stand for. Still got fam in Hawaii, yeah. Couple fans in the lobby, yeah. Couple grand in my pocket, yeah. Couple grams of wasabi, yeah. Eye it up, no glasses. Light it up, no matches. Wife it up, no ratchets. Might turn my wife to an actress. And we gon' make a movie, no Kim K. Give a fuck about what your friends say. I got money on my phone and money on me. I got all these hoes, but still lonely. They been blowing on that strong, but still so weak. I've been higher than a drone, but still low-key. We been sitting on the floor, they in the nosebleeds. Lately I've been in control, they can't control me. Yeah, they about to get exposed for being so cheap. I've been sticking to the code and I ain't gon' cheat.
I'm just sticking to the code, I keep it so G. She asked me what I smoke, I'm smoking OG. I don't fool with too many, only catch me 4 deep. Gotta stay away from snakes, swear these people so creep. I've been grinding for a minute, many labels so sleep. These rappers drop a song, be hot for about a week. I put Gucci on my toes, I keep some cold feet. I ain't paying for no hoes, you niggas know me. I'm about to body the beat. I keep me a hottie with me. She wanna for a fee. Give me that for free. Keep me some money on me. Smoking the gas key. You with me, sheesh. Bonito, cheap, Keith.
I got money on my phone and money on me. I got all these hoes, but still lonely. They been blowing on that strong, but still so weak. I've been higher than a drone, but still low-key. We been sitting on the floor, they in the nosebleeds. Lately I've been in control, they can't control me. Yeah, they about to get exposed for being so cheap. I've been sticking to the code and I ain't gon' cheat.
Yeah, head up in the clouds, thought they saying I look stressed. I've been feeling down, pray to God that I'm up next. Remember when she blew me off, that's why I can't text. Now she call me petty, but I swear I can't forget. This ain't a test, now they saying that I ball like Jerry West. Coming back for what is mine, can't take no less. I said go and take a shot, so I need your best. And stop the threats, don't know what is into me. I don't got time, I'm not giving the energy. Too many people around me, I'm finicky. I do not mess with you, dog, you're not kidding me. You don't got way too close. I've been up at the top now, so they all wait for the landslide. I seen too many people that switched up, whose man's high. Through it all, I stay the same, I swear to God, I can't lie. Been down so damn low that I came up for my life. They talk way too much on the internet, it's not real life. I swear my fam waiting, I can't lose and I'm still right. Still right, I swear that I'm working, I'm up till like midnight. It's real life, I got a time and I'm coming to get mine. In time, I cannot lose and I'm coming right inside. I'm in my, yeah.
Here we go, at the top of the class on a roll. And it's time to run it up, yeah you know. Maxed out, put the pedal to the floor. Ayy, on the road, here we go. Yeah, we winning by a landslide. Never see me coming, I'm a landmine. Yeah, I ain't taking orders in command like. Yeah, you about to see me on demand like. You know on demand. If you ain't know, you about to understand. Yeah, I got the team by my side, right hand. Yeah, take it to a string, you ain't seen it like that. Yeah, and Yeah, and we ain't never going back now. Future expedited, now we on the fast track now. They won't lend a hand, now they see us on the map now. It's time to act out. Here we go, at the top of the class on a roll. And it's time to run it up, yeah you know. Maxed out, put the pedal to the floor. Hey, on the roll, here we go, yeah. At the top of the class on a roll. Hey, and it's time to run it up, yeah you know. Yeah, maxed out, put the pedal to the floor. Yeah, on the roll, here we go, here we go. Here we go, at the top of the class on a roll. And it's time to run it up, yeah you know. Maxed out, put the pedal to the floor. Hey, on the roll, here we go, yeah. At the top of the class on a roll. Hey, and it's time to run it up, yeah you know. Yeah, maxed out, put the pedal to the floor. Yeah, on the roll, here we go, here we go. Here we go. On a roll, here we go, here we go.
What is going on, everybody? Welcome back to another FOMC live stream. Sorry, guys, I was running around. Literally just sat down in the chair. But what is going on, Mafia? Welcome back. FOMC is upon us. Allow the chaos to ensue, guys. What are we expecting today? Are we getting a pump? Let me know in the chat. Are you guys looking for higher prices? Are you looking for the bigger dump? Well, on today's live stream, guys, we're going to live stream FOMC. I'm going to show you all the key levels. We'll do some TA first. I'll show you all the key levels that I'm looking at. What I'm personally expecting here out of FOMC and the next move on Bitcoin. We'll talk about the trades. I am schlong right now. I'm long and short at the same time, baby. FOMC can't get me. Or maybe they can. I don't know. We'll see. But shout out to the Mafia. Thank you guys for tuning in. We got a bunch of, we got a dump and a pump in the chat. Dump or pump, rip or dip. Let me know in the chat. I want to see what the Mafia thinks. I'm sure there is some kind of a poll here. Let's see what will happen next. Fed cuts rates, and BTC and alts will pump. 46% are looking for the push to the upside. I like it. I like it. But we'll take a look at the TA and see if that agrees or disagrees. But obviously, guys, FOMC can be pretty chaotic and random here. So be careful if you're out there trading. Please, for the love of God, set a stop loss. Do not get wrecked on FOMC. Schlong and strong. Shout out to Mystic Ruin. I like it. Who else is long and short at the same time? Let me know. If you don't know whether to go long or short, guys, you just do both. I'm just kidding. Both my setups are from legit levels, legit setups, not just clicking long and short at the same time. Obviously, a dangerous situation. Good Lord. Shout out to Christian Mella. Says, Frankie rips me open. All right. Shout out to Christian Mella. Welcome in, bro. BTC at 300K yet. Shout out to Ricky Lee. Not yet. We're trying. We're trying, brother. But yeah, shout out to H-Bar to the moon. Shout out to Off-Grid Carnivore. We got Watson in the chat. John R. Simply Better. All set. Moonsy, other option, says, let's go. All right. Well, let's shout out to DK Insight. Said, when the market stops wasting time, is today the day. Yeah, shout out to DK Insight. Hopefully we can get some kind of a decisive move in here. And, of course, we'll break down the charts before we actually get the decision and we see Powell speak. Good afternoon. And hang on, guys. I forgot to give me 1 second here, guys. Give me 1 second. I will be right back because we forgot the most important part of FOMC Day. love that. But anyway, guys, without further ado, let's go ahead and break down the charts and see what we got sitting here. We'll talk about all the key levels, etc. Shout out to our boy Powell. Good afternoon. Let's jump into it. All right, guys, so here we are on the Bitcoin chart. So if you guys tuned in to the live stream last night, you will know we were looking at our local volume profile with key support down below. We are currently holding above our first major key level of support, sitting here at about 111,500 between the golden pocket and the POC. Let me take some of this off the chart just to clean it up a bit, get a nice clean view of what we're looking at here. So obviously holding my short position from the high here at that value area high. We got that rejection. We had the short set up in the premium Discord. You guys know 2:30 in the morning. I'm sleeping. I missed the trade. It comes back down. I catch it on the retracement right before the drop down, and I am still holding that position over here on OEX up about $1,200. So holding this position, and I am also holding a long position from lower here. Yeah, long position from lower. I thought I short from lower. Long position from lower as well, up about $2,000. So I'm long and short at the same time. Powell ain't going to get me this time, guys. Powell ain't going to get me. It'd be hilarious if I get stopped out of both of these positions before we pick a direction. But as you guys know, yesterday on the live stream, we were looking at this rejection potentially bringing us all the way back down to that point of control. I know I say it every single time, but these volume profiles are absolutely goated here, guys. Looking for that rotation from the high, making that highest probability area to come back into the fairest value or the biggest level within the profile, the strongest magnet within the profile, which is that point of control. And here we are. So the question is, are we going to get a bounce? This is obviously our first key level. We have the POC. We have the golden pocket. I don't believe we have anything else in there. No daily MPOCs. Yeah, so we have no horizontal levels in there, but we do have the confluence here on the point of control golden pocket. Are we going to be able to get the bounce from here, or are we going to have to go down and revisit the value area low to fill the volume profile in full? And are we going to have to come down here closer to about, 110.5 all the way down to about 109.913? Well, I'm going to break it down here for you guys. This obviously is our first key level of support. From a chart perspective, obviously FOMC could be crazy. I'm not going to say just because you don't have confirmations down here, you can't just, scam to the upside. Obviously, the volatility is going to be crazy. But as of right now, we're kind of just playing around with this point of control golden pocket. At the end of the day, guys, if we're able to stay above here, we could get another push to the upside. However, we don't have any 15-minute bullish divergences. We don't even really have any lower time frame bull divs. I actually was talking about this last night. Oftentimes when we see our momentum waves forming like this, it does indicate that a potential new low can come in. I cannot unsee this, guys, right? This oftentimes does look like a bearish divergence will form, which would call for a lower low on price. And when you have this key target underneath you, oftentimes that is going to be the high probability move. But again, FOMC, I can't make any promises here. FOMC might just start scamming us up. But, from a traditional kind of typical TA perspective, right? On any typical day, I'm looking at that and I'm like, we're reclaiming the level. Not impossible to bounce, but we don't really have a ton of confirmation there. Just taking a look at the lower time frames here, you don't even really have the 5-minute bull div. And then also when we look at this, guys, yesterday we looked at this on the live stream as well. 80-minute money flow, 90-minute money flow coming out. And we do, come on, there we go. We do have that red dot printing on the daily. That is a market cipher B, 1/16th bearish setup. But you can see our money flow still trekking up here, guys, on the daily. So for the bullish case, right, this is the local viewpoint that we had. So, for this short position, if we cannot get above this golden pocket, I will be looking for the next target to be right down here. And this is a super key level of support, guys. If we lose this level, sitting at about, 786 value area low with our anchored VWAP from the low here, pulled from about $103,535. This is confluence. Value area low, 786, anchored VWAP. If we end up losing this level, guys, I am going to look at that as a bit more of a bearish scenario. I think at that point, you're probably headed down to our next key level of horizontal support, which has a ton of confluence down here between about $108,679 and $107,500. And there is another major key level below us, guys. Obviously, we've talked about that $102,000 weekly and daily MPOC where that 50-week moving average is sitting. I think the 50-week sitting at about 103,000. But when we pull our one of our macro golden pocket 786s. I'm going to pull it from this low all the way to the high. You can see our major 786 here. technically tapped by this wick, tapped twice by this wick, but if we're unable to hold that $108,000 to $107,000 zone, guys, and we cannot get a bounce from there, we could be on our way to that 786, which would slightly front run the major level of support that we have down there. Again, daily and weekly MPOCs. I believe we have a daily horizontal and a weekly horizontal down there as well, right? So this is a little bit of like two different levels. You have the 786 sitting at about 104.5 down to about, you look at it as a zone, right? We could wick through it, obviously. It's not going to be an exact level. But I would say it is, 786 sitting at about $104,148. You can look at that as your last place to bounce before you wind up coming back down here to fill that 786. So I don't know how volatile this FOMC is going to get. I just wanted to cover those lower levels in case it starts dumping like crazy. But those are the big key levels that I'm looking at. And locally, of course, we'll probably just remain inside this range until it breaks down. We'll zoom out and start looking at those bigger levels. And obviously, this is our local range, but we also do have our main volume profile here. I'll even hide this golden pocket again. Major volume profile with, you can see we are bouncing off the POC very nicely, but we do still have that value area low here. The one thing that is interesting is we have not gotten the push all the way into our value area high yet. So when you look at this from the higher time frame perspective, and we've talked about this many a times, I mean, you could even maybe view this as somewhat of a trend line, right? If you wind up losing this trend line, we're breaking down below that POC, the value area low. We're also losing that key $110,000 level that we looked at on the local range. And then, of course, we could look for that bigger drop down to those next key levels. But if we're able to remain above here, right, like even if we get some turbulence, if we can stay on top of this trend line, guys, it could still be a potential higher low for a higher high, which was looking pretty dang nice, in my opinion, on the 4-hour. But you can see here, as we've had price action drop to the downside, our 4-hour money flow is coming back out. So from a key level perspective, these are pretty much the major zones that we want to stay on top of. POC value area low. And again, this is pretty much the same context as what we just looked at on the local range, but just a little bit of a different perspective. So long term, if that daily money flow is going to stay in the green, we also have the 16-hour money flow attempting to come out, but still in the green here. This is the higher low that I would prefer to hold. We don't want to break down out of this profile, and that could open the door for a bigger bounce into our golden pocket sitting at about $117,000. And we also have this high up here, which there is very likely some liquidity sitting above. And we have some local levels as well. If we start moving, we'll look at it. We'll look at them live. But this is the level, guys. We got to bounce here. I'm hoping to bounce here. If we don't, we're hoping for some kind of SFP. Now, I don't typically take new positions here on something like FOMC. Obviously, it's very volatile. If I get like a beautiful setup, right? If we had some nice bullish divergences down here, we do actually have a long setup down here in the premium Discord. I took a shot at it last night, but as you guys know, last night I was talking about how, as we were coming down to these key levels here, right? I took the entry and was expecting another low to come in for the same reason I mentioned earlier in the stream. We had our momentum wave looking like it might want to put in a bullish divergence. And what happens? We do indeed get that low. Bullish divergence comes in, and we get that little retracement back to the upside. I am now stopped out at break even on that trade. But at the end of the day, right, I had to move my stop loss to break even before I went to bed. But at the end of the day, right, if you don't move your stop loss there, this is still valid. So, if we do get that push to the upside, right, like this is really the level we want to bounce off of. If I had cleaner bullish divergences here, I would re-enter this trade, and if it wasn't FOMC, but I'm just going to let the chaos ensue, right? I don't want to enter a trade here, and then you get an FOMC wick that stops you out, and then it just sends it back up. So we're just going to kind of sit here and look at the charts. I'm going to hold my current positions, and hopefully Powell doesn't stop me out of the long and then stop me out of the short, or vice versa, and just leave me positionless when we get the big move. But let's see. Let me check in on chat. Shout out to Jesse in the chat. What is going on? Welcome in, brother. If Frankie blows me a kiss, I'll join the Mafia. I'm not blowing you a kiss, Christian Bell. I can't do it, bro. I can't do it. I'm on TV right now. Can't do that live. But, hey, bro. Hit me up in Discord. I'm just kidding. It's a joke, guys. It's a joke. All right, let's see. We did fill a CME gap down here, which is part of why this level is key. But again, the FOMC volatility is going to be something to be cautious around, guys, right? I think the simplest way to look at this is going to be the trend line because, of course, it comes right in confluence with that key level. I wouldn't be surprised if we hit this and get a bounce, right? And the other reason why I'm not like super aggressive here on an entry other than the fact that it's FOMC is the fact that I am still holding my long from lower, right? So if this decides to scam up, stop me out of my short, right, my long will continue to pay me out. So nice and cushy here. As long as they don't stop me out of both positions, whatever way this goes, we should be in the green. Let's see. We got Servando Estrada in the chat. Welcome in, brother. Welcome in. Thank you for being here. Higher low, then higher high. Shout out to Lost Travel. That's what we're hoping for. We're hoping this is a higher low. continue up, get back above that anchored VWAP, and just to cover some of the local levels, I'll set some alerts here too in case we're watching the stream or something and we wind up getting these levels tapped. So let me pull up the local profile, mark out some of the key levels here locally. Number one, right, we have this golden pocket at about 114.6. I'm just going to view this from a simple, I'll keep this on here, but I'm going to say the biggest key level here is probably going to be around the 786 value area high. So let me go ahead and set an alert there on the 786 in case we do push up there. We'll get the alert. This is obviously going to be key support, or I'm sorry, key resistance. Of course, if we did get the drop down to the value area low, I'd be much more interested in a big rejection here. But if we do not fill that entire volume profile, guys, this could be a higher low on the POC. If we can get above this $115,000 zone, get out of the value area high, checking, we could maybe pull up the liquidation heat maps real quick. Let me load these up for you guys. Very likely, right? We probably have some liquidity sitting above these highs. We've already gotten the SFP of the equal highs here, but if we do come up, guys, one thing I will be looking for here is if we get the push and we sweep above this high, we do have a very, very, very key level of resistance above, which I did not mean to draw it that close to there, but it is going to be that golden pocket sitting at about $117,000. So I would say 115K zone is first, major local level of resistance. Get above that, we're looking to sweep into the bigger zone between about 117 and 118,250 or 118.3. All the same levels we've been keeping an eye on recently, but maybe we can get some kind of a massive move here. That would be very nice. But continuing to get the nice little bounce here. Not too bad, not too bad. We didn't even have to test that trend line just yet. And even if we do get down to the value area low, guys, right, we could see a situation, right, get some kind of aggressive wick, get back above, send it back to the upside. Not until we lose this level where I'll be looking a bit lower to that $107,000 to $108,000 zone. So simple. We got our key level set. We'll let the chaos ensue. Maybe we'll even start narrating that 1 second chart like we did last time. That was fun. Oh my God, it's mooning. Oh my God, it's going up forever. Right? This is maybe we will do this. This will be funny. But let's see here. Ethereum. I'll take a quick look at. Shout out to Cameron says I'm an insider. We're going to all-time highs today. Hey, I hope so. Maybe they cut rates more aggressively than expected. And it's like a bullish Black Swan event. That'd be sick. That'd be sick. We could push it up to higher prices. But, just taking a quick look at Ethereum here, guys. Obviously not on the 1 second chart. Nice little bounce here. Nice little bounce. Let's come out of bar replay mode. Bada boom, bada bing. So Ethereum. Yeah, so here's the thing with ETH, right? I actually like this only because we have the bullish divergences, higher lows, lower lows, right? Giving you that bull div. One thing I don't love is the fact that we do have the value area high and the anchored VWAP above. This does not mean that you can't flip this back to support, but this is going to be the major level of resistance, right? So if we pull this up, this is the level to get above. Anchored VWAP, value area high, sitting between about 4,031 and 4,055, which is also, hilariously enough, basically our macro 786, right? So that's the first level to get above, and that's kind of why I don't love it, right? We get accepted into the range. If even if you wick up, maybe on FOMC, you get some kind of crazy wick, this is the level you don't want to get accepted into, because just like on Bitcoin yesterday, right, you get accepted in that value area high, you're looking for that POC next, and that's how we caught that nice short position to the POC on Bitcoin. But it's the same idea with Ethereum. I don't hate the bullish divergence, right? But you got to get above this key level of resistance. If we can do that, the next major key level, in my opinion, is going to be the value area low, POC confluence, sitting right up here between $4,200 and $4,300. Once we get above that, we can start to look for a bigger continuation to the upside through this profile into the POC at 44.76 and then into the value area high at 46.50. Now, the other thing I don't really love here is the fact that look at your money flow, right? 1 hour, and this is just the 1 hour money flow. It's not like, oh my God, bear market, but it's what indicate that you could potentially continue to put in lower highs and lower lows. Now, is this in line with its 16-hour red dot? It is not, so you don't have the market cipher B116 strategy, which is a little better. If we had a fresh red dot sitting here, I'd be a lot more bearish. So we'll see. Maybe we can snap above this and start playing around with these zones, and maybe we'll see it happen live. We can cover the price action live and narrate it like a horse race announcer. And Ethereum breaks above $44,074. We're pushing up towards that value area low. But anyway, let's see. Shout out to Crypto Al said, thank you for sharing the wisdom. No problemo, bro. I'm just doing what I love here. 155 or 156 on a Wednesday afternoon. Blessed to be here hanging out with you guys and making money in the process. All right. So, so for Ethereum, that is what I would be looking at. And yeah, again, money flow, daily money flow. This, of course, does look a little bit better, in my opinion, than Bitcoin just because it's a little less choppy. We only have like one fake out into the red here. So this does look a little cleaner than Bitcoin, but of course you do still have the red dot with the 80 and the 90-minute money flow about to cross over into the red. We're hoping this gets invalidated, guys. This is a bearish market cipher B setup, especially the daily and the 90-minute. It's a little bit of a higher time frame setup, so we're kind of hoping that this just scams back up. We need this 80 and 90-minute money flow to come back up. We need that red dot to disappear. So, just be aware of that, right? Like I wouldn't say the charts are like absolutely perfect for a massive move up here, but it doesn't mean it can't fake out, right? I'm only bringing the information on the charts, and because that's how we make money, right? Even if I wanted this thing to go to $1 billion, if it says it's going down, we're going to short that thing down. Not that I trade ETH very often, but and then the other thing too here is like I just don't see this as a very key level of support. And again, it is not me saying that you cannot bounce here, but it's like, if we were getting this 1 hour bull div into like the value area low, right, this would look a lot better. And if money flow was not coming out, would look a lot better for some kind of a bigger move up. So kind of hoping for the fake out here for some kind of like, sustainable massive move up. Again, like the volatility can get crazy. You might be like, oh my God, it's super bullish. And then all of a sudden FOMC ends, it's a massive wick and you just continue down. But I'm not holding any trades on ETH, so I have a little bit less of a preference here on what happens. But these are definitely the key levels to watch. If we wind up losing the 786 at 36.19, we're going to be looking down towards that value area high at 35.30. Anchored VWAP value area high, massive level of support. If we lose this, we're probably headed down towards this golden pocket at $32 to $3,100. So for Ethereum, right, like it would be nice to hold this, right? But if we can't, you got to hold this and this. If we lose that, much bigger drop to the downside in store. And to be honest with you, the daily and the 90-minute setup that we have right now could point in that direction, right? So we're just hoping maybe the FOMC volatility can just step on that if you want to move to the upside. If you're in a short, hopefully the TA just plays out. All right, let's see. Horse race version, please. Shout out to DS. It is fun. I actually like that. Shout out to Meltup, said, are you bullish or bearish? Well, that depends on what context you're asking about, right? Am I bullish over the long term as far as like the bull market continuing? Am I bullish for I am a trader, right? So I can be bearish on a 5-minute chart, bullish on a 4-hour chart, right? I could be bearish on the 4-hour chart and bullish on the daily. So it is I would need a little bit more specific details to kind of answer that question. Am I bullish for the bull market to continue? Well, I would just point you towards our very, very key level of support, which is obviously going to be the value area high. If we could stay on top of this level, I am bullish long-term on Bitcoin. Doorways to all-time highs are open. If we start getting stuck underneath here, it gets a little bit more sketchy. So yeah, and to be honest, FOMC, I don't really even think it matters, right? Like even if I am bearish short-term here based off the TA, FOMC might just step on that, right? So if you're a little bit more specific, I might be able to give you a more detailed answer. Shout out to Tony D said I'm bearish. What's my price prediction for XRP? I mean, targets for XRP. We could take a quick look at this while we're waiting for the data to come out here. But for XRP, let me just pull this up real quick. My targets, assuming we get an alt season, right? My targets for XRP are probably, I don't know, depending on what camp you're coming from, you're probably not going to like these, but they're realistic targets, right? I'm not going to tell you $1,000, $10,000, $100, right? The major key levels and targets to the upside for me, if we get alt season, we see all the alts rally, right? Like first next major zone, if we break a new all-time highs between 418 and 453, flip that, come up here. This is really the first bull market target. If we get an alt season, these are kind of local targets. But if we get above there, this is probably the first place you'll get chopped around in. If you can get above that, we're going to be looking into the target number 1 here at about 550. If you get above that, right, it really starts cooking, right? We have targets at 851, 1158, and 1480. But this is not me, right? I'm not just going to hold my XRP and wait for that last target, right? If it looks bearish, right, at these, I talk about this all the time, it'd be nice, right? There's no person on earth that can tell you like, hey, 1481 will get hit 100%, right? They could feel really confident about it, but no one can tell you for sure. This is probably the highest I would be willing to look until proven otherwise, right? Maybe we just get some kind of random rip up and, we just continue and it looks super bullish up here. Well, maybe I would just look at higher targets at that point, right? But this is the highest I'm willing to look at this point. And at the end of the day, right, just to be clear, if we came up here and it looked like the top was coming in, right, like I'm not going to expect to come up here. But it's kind of hard, right? We have to, I don't know what the charts are going to look like up here. But those are kind of the major targets, right? 550, 560, 850, $11 to $12, and then $15. Those are the major targets for me. But, as we look at the XRP chart here, obviously we are approaching our major key level of resistance, right? We got to get above these range lows / value area high / value area low / 786.
all this support is going to be resistance on the way up. So I would feel a lot better about XRP if we can get above here and flip this to support. That would make me look up towards the top of the range here at about 313. And then really this is pretty much the overall doorway into new all-time highs. Once we get above there, I think there's a good chance that you can snap above that all-time high and maybe push up to some of these higher targets. But big resistance above. Number one right here, sitting between 270 and 280, and then even above that, right, we pull these bigger Fibonacci retracements, being careful of those retracement levels. Pull it all the way to the bottom of this complete and total scam liquidation wick. You can see that 786 sits right up here as well. This is technically the doorway to higher prices or the doorway to new all-time highs, right? So you got the PLC, value area high. Once you get above that 786, that's where you can start looking for new all-time highs. And I'll actually, these are not invalid levels, but I will just hide these because we've already come up into them. So they could still act as resistance, but just to kind of show the bigger clear target to the upside, right? Major levels of resistance. Get above here. We could start to open our eyes. I mean, you got the golden pocket there as well, but get up above here. I feel a little bit better about at least getting a bigger retracement, and then once you can break out of this, that's where you can look for new all-time highs. And again, that next target's going to be upwards of 420, giggity, not giggity, but 417 would be that next major target. All right, let's see. Make it pump, Frankie. Make the pump it call. Should we call Satoshi? We might have to call Satoshi, guys. We might need some help here. All right, let's see. Call the market makers. Call Satoshi. Satoshi's mad at me, guys. I think I bugged him too much. Every time I called him, he did what we asked him to. We asked him to pump Bitcoin. We asked him to dump Bitcoin. He always does it. Last time I called him, he hung up on me, guys. I think he's sick. He's my cousin, and I think he's just sick of hearing from me. He's like, I help you out all the time, bro. But anyway, let's take a look here back at Bitcoin, and there is the volatility ensuing here. Oh, my God. All right, let's pull up the TA here real quick. Already have the chaos starting here. Look at that wick. Let's pull up the local profile here. Yep, still above the PLC. Okay. All right, we'll take that. Come on, stay above. We need to stay above this level. All right, it's not the last level. We still have this down here, but stay up here. This would be very nice. Give us that continued bounce. Give us that bounce, baby. I'm not getting excited here, guys. I'm not even really, FOMC is crazy. Oh, my God, we're pumping. This is super bullish. Oh, my God. So be careful out there, guys. Be careful. I don't even recommend new traders trade today, right? Typically on these big news events, it's all unpredictable volatility, right? It's a lot of stop hunts, big wicks, liquidity sweeps. So please be careful, especially if you're out there new. And if you do want to trade this, please set a stop loss. Both my trades have stop losses, guys. So the worst that'll happen is I'll either get stopped out in profit or stopped out at break even. Let's see. Gold is trying to move up. Oh, my God. Gold is never going to stop. Hold your BTC. Screw the charts, Frankie. Oh, I'm holding my BTC. I was actually talking to a close friend here. Here's your super chat delivered 2 minutes late. Rates cut. Yeah, it's probably, was it 0.25? Can somebody let me know? You guys will probably be able to do it faster than I will. But I was talking to a personal friend of mine yesterday, and they were just kind of asking the question, right? It's like, what's going on with Bitcoin? And he was asking me what I was doing, and I was like, I'm probably in a different situation than you, right? So for me personally, right, I am obviously still holding almost all my spot Bitcoin, right? I took a little profit at our first target here, first bull market target at about 108 to 192 to 102K, right? I came up here, took a little bit off. This was a target I had been waiting for since I had bought in down here. So I have been holding my Bitcoin for quite some time. It is also massively up, right? So I do have a bit of room here to kind of make comfortable decisions. It's not like if we dump to 102K that I'm like super down on my Bitcoin, right? So yeah, I'm still holding strong. And again, guys, simple perspective here, right? As long as we could stay above this level, right? Locally, we want to stay on top of this trend line, right, to continue up. But if we break down here and we have to retest, as long as we stay above here, doorway to all-time highs is still open. This has been my bias ever since we came down here, got the new all-time high. It's okay to come down, retest the range high for another new all-time high. We got it. Check it off. Shorted both of these tops with the premium Discord, and then we came down for another push into that value area high, and this still keeps that doorway open to new all-time highs. It's not until we start getting broken down below this value area high, by the way, sitting at about $108,000, that I would be a little bit more concerned, right? Not that it would be instant bear market, but you are coming down to those very key levels near the 200, near the 50-week moving average, near filling this wick, and if we do get the bounce there, right, we really want to see it happen pretty aggressively. So as long as we're above here, feeling okay long term. All right, let's see. Shout out to Brillo said there's no option for Fed cuts and Bitcoin continue dropping. Yeah, shout out to Brillo. You would think that, right? You would think that. But typically, unless it's like an unexpected cut, sometimes you do get like the knee-jerk reaction, like sell the news event. But that doesn't mean it can't be good long-term, right? We're just talking about local volatility here. Let's see. Check Tau. We could check Tau. Where we at? Let's come on over to the alt charts. Tau. Where's it at? Bada boom. All right, so Tau. Let's take a look here. All right, so we had the key level of support still holding, guys. The higher low right on that 786. Look at the tap of that 786. This is the level you need to hold for the higher low to potentially call for higher highs, meaning breaking above this high right here. We actually already did that. Technically, yeah, we swept that high. So there you go, low, high, higher low, higher high on the wick. We can get rid of, I'm going to keep this resistance here in case we do close the higher time frame candles below there. But this is, let me take this off actually. Bada boom. So yeah, we'll see. Right now, I mean, your most local level of support is going to be that value area high. We've already retested it. If you could stay on top of this, you might be able to continue up here, right? You have your low, your high, your higher low, technical higher high, but you could still continue up here. Next key level of resistance is going to be 473.97. Now, this is an important level, right? Because if you break above this, that is where we are going to be looking for a move into the POC at about 560, right? 559.81. So those are the next like significant key levels to the upside. But I would say just in general, this is your biggest level of support. If you get stuck back in here, sure, you have this golden pocket, but it's already been fully tapped, fully filled to the 786, so I don't typically expect these to hold up for a second time. So if we get accepted back in here, lose that 786, I would just be viewing that as a volume profile, right? Lose the 786 golden pocket, you're looking down towards the POC. If you can't hold that, you're looking down towards the value area low. And like almost every altcoin is kind of in this situation where you're kind of sitting between your lower value and your upper value. Here's your upper value. Here's your lower value. We're kind of just in between. Typically, when you deviate above a value area, this is looked at as overvalued for acceptance back into the range, back to the POC, back to the low, vice versa, back to the low, back to the POC, back to the high, right? So, it's a little bit hard because it's like, should you be looking at this as a deviation? Well, you could, right? But if you're able to break up and flip this to support, well, hey, then you're going to get accepted into the upper value. So hopefully we can hold on top of that value area high, push into the upper value, and start pushing up. That would be the hope for the moves to the upside. If you lose that 786, I'm probably looking for the full fill of this range. So there you go. Quick TA on Tau. Watching the 1 second time frame, it's a rodeo. Oh my God, yeah, it's probably chaotic. Let's see here. Let's come back down. Oh my God, we're getting another. Oh God, she's pushing back down, guys. She's pushing back down. Bear with me for 2 seconds here, guys. Let me just. Bada boom. Let me just pull some stuff up here. All right, so we still have. All right, so we got some time. We got about almost 30 minutes left till we watch the live stream. So yeah, if you guys want to see some altcoins, go ahead and drop in the chat. Start doing some analysis on the alts. Just complete chaos here, guys. Look at this price action. Look at this. Oh, gotta love it. Gotta love it. Let's pull it up on the 1 second. Look at that. Oh my God, she's getting the pump to the upside. Is she gonna break the high? Come on, baby, come on. We have Trump as huge resistance. It's crazy. Trump is the god resistance. All right, let's take a quick look at H-bar. We actually looked at H-bar last night, but let's check back in on it. All right, let's see here. What is this? This is the Bybit chart. It's the MACD chart. Here it is. Whoops. Let's see here. All right, so H-bar still holding key support. We talked about this yesterday, guys. Kind of broke down the fact that this was the biggest level on the chart, this 786. This, if lost, was very likely going to give us a break of these lows, where our next major key level of support was the value area high. We've already broken below this, right? But it was almost, I want to say luckily, on this massive liquidation wick, right? Like if you weren't on the charts that day, you would have not even felt that pain. You would have just been down, back up, and you settled back on that 786. So very important that we held this. And we talked about how critical this was to hold for a continuation to the upside, because when we look at this fib from the low to the high, this is the last chance to put in a higher low while still keeping the opportunity open to get back up and put in a higher high. So we're holding it right now. We're attempting to break out of this volume profile. But again, on FOMC, it's like I don't know how well I trust these moves. Maybe when we check in after the live, after this live stream, on the live stream later tonight, we'll have a little bit of a better idea. But the same thing, right? Like you're just kind of now between these two value areas. You have your lower value, you have your upper value. So the hope here is to stay up here, continue that uptrend. This anchored VWAP comes in at about 22 cents. If you can flip above that, right? I'll actually mark this out as a zone because these are somewhat confluent here. Okay, Tony D is calling me on Discord. Is that? Oh wait, hang on. Oh my God. Sorry about that, guys. I'm like, why is Tony D calling me on Discord? This is crazy. Sorry about that, guys. Sorry about that. So H-bar, key level of support. We talked about this last night. If you tuned in last night, major key level of support. Why is that? This fib is pulled from the low to the high. Low, high, higher low, keeps the doorway open for higher highs. And I was talking about this wick. If we lost this level, assuming this wick was not here and we didn't get that wick, right? If we lost this level decisively, I was just anticipating pretty much this exact same move, but over a longer period of time, not a massive wick, right? And the next key level that we had on the chart was the value area high at about 89 cents. Luckily, we kind of already saw that happen. This is where I was saying, you guys were like visioning it in your head. This is where it's like, if you're not on the charts that day, it's like you already did that. And we got back on top of that 786. You could see where price settled. It settled right back on that major key level. This was just all liquidations, right? So it's kind of nice that we saw that just happen on the liquidation wick, right? Because it's like, I don't know, like technically you broke the level, but it's like if you settle back up there, it's very nice. And if we can continue this, right, you're looking for the low, the high, higher low. This does keep the doorway open for a higher time frame, higher high to come in. And it kind of lines up with the roadmap on price. If you could stay on top of this value area high, push up, anchored VWAP here, mark this off as a zone from the value area low to the anchored VWAP between about 22 and 24 cents. That's the biggest level to get above. Once you can get above that, I'm feeling pretty good. You're back above the anchored VWAP. You're back above the value area low. We're already looking for a low, a high, a higher low, and a higher high. Again, of course, as long as we stay above here. Then you're looking for what? The POC. Well, it would make a lot of sense to come in and put in that higher high on price when you have that magnetic target of the point of control. Once you get up in here, you have that POC just sucking you up. And it would make a lot of sense for a low, high, higher low, higher high, even with this massive wick to the downside. Now, on the flip side there, if you cannot get above that value area high, we get accepted back into this volume profile down below. And again, lower value, upper value. We're just kind of in no man's land here, right? You got to either get accepted up in here for the bigger move up, or if you get accepted, if you get accepted back into your lower range, which, by the way, sits at on the value area high at about 19 cents, if we get accepted back into here, POC and the value area low are all the way at the bottom of the range. I would at least be looking down here. And again, we've already tapped this once, twice, 3 times. I don't know how much better that's going to hold up on the third time around, right? So, like, I would prefer the continuation up here personally, because we don't want to come down and test that 786 again. The more times you tap the level, the more likely it is to open, right? The more time you knock on the door, the more likely it is to open. In this case, the door is the floor. If this opens up, right, yikes. Kind of looking at the same thing here, but just, more of a decisive break, not on just a liquidation. So, very good that we held this level. I cannot be more explicit about that. Very good that we held this 786, even with, the most insane drop to the downside. It's just, absolutely magical that you close the candles up here. Even if you look at the daily, right? Even the daily candles closed on top of that 786. So I would still classify this as a valid hold of the fib level. So there you go. That is what I'd be looking at. Key level to the downside, 19 cents, almost 20 cents. Key zone to the upside to break above 22 to 24 cents. Get above that anchored VWAP, value area low, I'll feel pretty good. Looking at it from a money flow perspective, we do have money flow attempting to come up, and even this looks a little cleaner than Bitcoin, because Bitcoin's just in the green, in the red, in the green, in the red, in the green, in the red, right? But this has a little bit of a smoother red wave, right? So we can look for that money flow on the daily. If we start breaking out here, right, and we have this money flow crossing into the green, let's say we get a push up, and then you start to get that red dot printing, you get a pullback, this money flow crosses into the green, we can look for higher lows and higher highs, which would assist that move up. But we'll see. We'll see what that FOMC volatility brings us. Let's see. Shout out to Open Your Mind, bro. Tony D, look at that chat, bro. Oh my God. Anyway, let's continue on. I'll open your mind. Oh man, I try to keep it G-rated here, guys. I try to keep it G-rated. Open your mind, more like open. Nah, never mind. Anyway, will you be showing the meeting and commentating while he's speaking? This is my first Fed stream with you. Thanks. Shout out to Father of AJs. Yeah, we will be streaming the live stream. Good afternoon. But I usually go back and forth, right? Like, usually Powell puts me to sleep. All I really care about is the charts anyway. So we'll probably have him talk, and we'll watch the stream a little bit. But a lot of times we just let him play in the background, and we'll overlay the chart so we can see what the candles are doing. Already texted you about it. No way. Shout out to Tony D, bro. Shout out to Open Your Mind, man. You're funny, bro. You're funny. Tony D texted me and said Carisha Mella needs to be arrested. All right. Anyway. All right. What should we look at next? This is like Cartoon Network After Dark. Yeah, we get a little wacky on FOMC. We also got the 3-eye Atlas thing going behind the sun, some big solar flare. I don't know. Today feels like a weird day, guys. Are we about to see a massive awakening on human consciousness? Does anybody follow the 3-eye Atlas stuff, or am I just so deep on conspiracy Instagram that I'm just being fed propaganda? But anyway. Buckle up. This is going to be a hell of a ride. Shout out to MST. Yeah, it is definitely. No, I think the speech starts at 2:30. We still got a few minutes. If Powell goes, then we're screwed. Shout out to, yeah, I mean, it really is true. It's like, good afternoon. And the chart's just like, everybody just freaks out. You ever see the meme that's like FOM, if TradingView had proximity chat during FOMC? It's just like everybody screaming and freaking out. Oh, man. But let's see. Let's get back over to Bitcoin here real quick. Oh, my God. She's pumping, guys, on the 1-second chart. 111,500. Pushing up, continuing up here. Are we going to be able to take out this high at about $111,705? Pulling up the TA here. Pulling up that local range, guys. Good Lord. We are playing around in that golden pocket POC zone. This is the key level to hold. Operation Blue Beam incoming. I don't even want to say that out loud on YouTube. But, yeah, it does. It's very interesting. 3-eye Atlas is pretty interesting. Don't fall for its propaganda. Shout out to Melt Up. Yeah, I just take everything I hear. I believe nothing that I hear and like almost nothing I see at this point. I follow 3-eye Atlas like crazy. Definitely weird. Yeah, it is definitely interesting, right? 1 second TA is so intense. I know, it's insane. It's like, it looks like it's moving all around. It's just like you're just chopping around in this tiny little zone. All right, we got about 10 minutes till the live stream begins. Seller buy. Shout out to Haya. I am not a financial advisor. I can't tell you what to buy or sell or when to buy or sell. But what I can tell you is I can tell you what I'm doing. And I am literally long and short at the same time. Both in almost $2,000 in profit. Stop losses at break even. So we'll see. We're just kind of hedged here. We're hedged. Shout out to Adil says, 0.25 cut. There we go. Right. I think that was the thing that was priced in there. So really, when it comes to FOMC, guys, it's really like, unless they do something totally unexpected, I don't expect major moves, at least on the announcement, right? If everybody's expecting 25 basis points and they cut 25 basis points, in my head, that is either like a little bit of a knee-jerk sell the news situation, right? Not that that's not good long-term, obviously, but it's really not unless they come in and they're like, oh, my God, 50 basis points, we changed it, right? Unless it's something unexpected, that's kind of, I explained this yesterday, right? If they cut more aggressively than is expected, that's where maybe the news can actually just give you a big blast off to highs, right? Or into higher prices, or, even vice versa. But When it comes in as expected, it kind of is just like I don't want to say it's a nothing burger, right? It's obviously good longer term, but it's like if you want like those big reactions like during FOMC, it usually happens when he's talking anyway, because that's what everyone's looking for. They're looking for his language. Like if they're trying to figure out if he's going to print money, right? But he doesn't say that directly. He kind of just speaks in these backwards riddles. You have to try to decode it, and that's really what everybody's listening for on these live streams. They're trying to hear hints in his language that they're going to look to print money, like in the simplest form, right? Like I'm not a macroeconomist, I'm not an expert, but it's essentially what they're looking for, right? Because if they print money, if you guys watch the show at all, you will know, for me personally, right, like that is one thing that would indicate to me that maybe the cycle can extend because, again, right, like I talk about this every day. I hate to be super repetitive, but I think it's important to understand that from a 4-year cycle, like we're in an interesting situation because from a 4-year cycle perspective, we are coming up to the end here, right? Like we're already in a longer cycle than last cycle. And when you measure from the halving to the top, right? Or actually not even just the halving to the top, just the entire length of the cycle. October 20th was that date, right? Now, that's not necessarily where I expect the top to come in, but if you look at it from a 4-year cycle perspective, and even if you look at it from a chart perspective, like the charts do have some of those warning signs that we saw in 2021, but one thing that can really change that, right? I'm never in the camp of this time is different, right? But something that can legitimately change that is if they just start printing money. This would be very good for risk on assets. Very likely that would cause a melt up in the stock market. I'm always in the camp that Bitcoin will follow the stock market, and of course, money printing would be very, very, very good for crypto's risk on in general. But when you compare Bitcoin to altcoins, right, the altcoins are much more risk on. So that's in my opinion, like if we can get that could maybe trigger alt season or help support alt season. But we also need Bitcoin to come up into new all-time highs as well. But it's really just like when you look at the 4-year cycle where it starts to get a little bit shady here, that we're coming up towards the end. But I am open, right? For like the first time ever, I'm at least open to entertaining that maybe this time is different because it's just factual, right? Like if they print money, in my opinion, right, like if they print money, that is going to cause assets to rise, right? Like it's just how it works. So usually people just call for this time is different because they're holding on to hope. But I do think there is an actual argument here if they start printing money that could actually be very good and potentially change things, right? And at the end of the day, we're not expecting the top to just come in on October 20th because that's where the time fib was. We still have time in Q4. In my opinion, I'd like to see the new all-time highs before 2026, right? If we get that, I think the 4-year cycle could still somewhat be intact, right? It's just a little bit different, which in my opinion, every cycle has its own little quirks, right? This was a blow off top. This was a blow off top. This was a double top, a little bit of a quirk. We've already gotten an all-time high before the halving. That's a little bit of a quirk on this cycle. But one thing that they all have in common is Q4 top, Q4 top, Q4 top, right? Q4 is not over yet. So I would really like to see the all-time highs before Q4 ends, and then hopefully we can get the alt season blow off top at the end, right? And then it all ends and the 4-year cycle stays intact. That'd be very nice because it would help us predict future cycles because the 4-year cycle would remain intact. But if we just kind of leak into 2026, it's like, well, you would expect 2026 to be a bear market year, right? And if it just turns out to not be a bear market year, I would have to say that, the only thing that can change that is like if they print money, well, then maybe we're just seeing something we've never seen before, right? And that would change the cycle, make it a lot more difficult to predict in the future. But, again, based off real information, not just hopium. But even so, right, like you want to keep in mind that the 4-year cycle is coming to an end, right? Let's see. Dump today, then Trump-China talks tomorrow. We'll pump the market. I hope so. That would be nice. That would be nice. And it's like the news, right? Like the news is never something I pay attention to. I say this constantly, guys. It's and then the reason for that is because like almost every macro top, literally almost every single macro top is coming on major bullish news, right? Talk about the Coinbase IPO in 2021. This was really the all-time high of that cycle, in my opinion. And even if you're not looking at it from that perspective, that news comes out literally right after massive 55% drop. We look at this, like every top here is coming on major bullish news. It doesn't mean that like we can't pump, but it's just like I'm never relying on that news to be the thing that's going to move us, right? Because like the number one text messages that I get from friends and family is that bullish news came out. Why are we dumping, right? It's like they're never like they're always like, oh, I can't wait for this news to come out. Then we're going to pump. And it's like maybe long term that could be the case, but it's like I don't know. It's like more often than not, when you're waiting for the news, you're already too late, right? Or you're on the wrong side of the trade. Same thing here, right? I always talk about the ETF approvals. Everyone's like, oh my God, we're going to pump, which is true, right? And this was my thought process here. It's like, I know this is bullish for the market, right? I think this will help us continue into the bull market. It'll help fuel that big bull market that we have ahead of us after the halving, right? Which we are in right now. But like, all my normie friends, all my normie family, like they're looking to buy here. They hear the news and they buy, and then they have to hold on for this like 22% drop to the downside, and they're like, "What happened? We had bullish news, now we're coming down." I'm like, "It's okay. It's still bullish, but it's like you're just like buying at the wrong time, right? But it's all right if you're looking to hold longer term." So I don't know. We'll see. Maybe the trade news will be better. Yo, shout out to Chatmaster, said when dog. Oh man, we don't have the puppy anymore, guys. We're done babysitting the pup, but we will get our own. Shout out to Salsabill, says Fed announced 0.25 basis point. Yep. 2 more rate cuts coming also pretty soon. A big pump coming. Come on, baby. That's the hope. We still got Q4 going, man. We still got Q4 going just in time. Yo, shout out to DCBC, said, Frankie, if I hook you up with 50K, would you triple it for me? I suck at trading. Shout out to DCBC. Unfortunately, I will not do that. I can't legally do that, right? I don't think. But I don't even do that for my friends and family, right? Like, trading is always risky, although, obviously, we're really good at the TA. We have the fire setups. We're making money trading, but, there is risk, right? And I'm not a financial advisor or an investment advisor, so I don't even do that for my family. I can't tell you how many times. Oh, man, if I could just give you, I'll give you 50K, I'll give you 20K, and, you could just trade for me and make me some money. That's like, number one, I don't need the capital to trade. There's just no benefit to me, right? It's like, even if I keep the profit, it's like I just trade my own capital anyway. It's like I don't need the money. I just it's just like a lose-lose for me, because it's like if I make money, I don't really gain anything from it. And if I lose money, then someone's mad at me. And also, I don't think I can legally do it anyway. But that would be fun. You might as well just get a real mini goat and name it Phoebe. Yeah, I really wish I could. I thought about getting a pygmy goat as a pet, guys, but I was highly advised from many people not to do that. It's a bad idea, they said. My sister's a veterinarian. She's like, you do not want that thing in your house, I promise you. But yeah, all right, let's see here. Let me pull up my face cam. I won't forget to change it this time, guys, but let me go ahead and pull up the stream, get it all set up here so we can listen to our boy. All right. All right. Back to the charts. All right, she's chopping around. Let's go ahead and pull up her key levels. Man, she's fighting with this POC, guys. Fighting with the POC. But from a general TA perspective, guys, I will say, big things. 90-minute money flow, 80-minute money flow crossing into the red with your daily red dot. This is typically a bearish sign, right? Hopefully FOMC totally steps on that, which is definitely possible, right? This is kind of TA is good, right? But, liquidation wicks can kind of mess all that up. But I would say from a traditional standpoint, at least locally, I wouldn't be surprised if we come down here because of that money flow in the daily red dot. And kind of the thing that I will be looking at that to play out will be this trend line / next key zone between 110,377 and 109,901. We get some volatility, you're hoping to stay on top of that trend line. And I think trend lines are easy, right? Now it's obviously confluent with major volume profile levels, etc. I'm not a trend line trader or anything like that. But when you just look at this from a simple perspective, it's I think this is very easy for people to kind of understand. It's we got to stay on top of this. If you break down below it, going to at least look for a little bit more of a move to the downside. And I already covered those levels earlier today. 108 to 107. Break down below that, I'm looking at about 104K. Below that, 102K. Buy a goat. Don't need to mow the yard. Trust me, it will be the best decision you ever made. Yeah, shout out to Chatmaster. I already decided that Tony D went to a wedding recently, and they just had goats grazing in the field during cocktail hour. And I was like, I'm stealing that idea. It's the coolest thing ever. Possum Fingers Petting Zoo. Shout out to B Team. Let's go. Welcome in, B Team. Welcome in. Y'all are 30 minutes late on the rate cut news. Shout out to I'm My Hero. Well, the rate cuts already came out. The stream is not started. Are we late on the stream? No. Stream is not started. 2:30 p.m. We got 1 minute. Shout out to I'm My Hero. Coats at a wedding is nuts. Yeah, I mean, Tony, you experienced it. How was it? Was it cool? Was it worth the? Was it worth it? I wonder how much that costs. Weddings are crazy. They're like, oh, you want 4 goats grazing in the grass? $20,000. It really is crazy. Oh boy, here we are, guys. Buckle up. I should have put my suit on. I'm nervous, guys. Practice raising my hand. Don't say it. Don't say good afternoon.
Good afternoon.
No!
My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Although some important federal government data have been delayed due to the shutdown, the public and private sector data that have remained available suggest that the outlook for employment and inflation has not changed much since our meeting in September. Conditions in the labor market appear to be gradually cooling, and inflation remains somewhat elevated. In support of our goals and in light of the balance of risks to employment and inflation, today the Federal Open Market Committee decided to lower our policy interest rate by a 1/4 percentage point.
Chat, we're cooked.
We also decided to conclude the reduction of our aggregate securities holdings as of December 1. I will have more to say about monetary policy after briefly reviewing economic developments. Available indicators suggest that economic activity has been expanding at a moderate pace. GDP rose at a 1.6% pace in the first half of the year, down from 2.4% last year. Data available prior to the shutdown show that growth in economic activity may be on a somewhat firmer trajectory than expected, primarily reflecting stronger consumer spending. Business investment in equipment and intangibles has continued to expand, while activity in the housing sector remains weak. The shutdown of the federal government will weigh on economic activity while it persists, but these effects should reverse after the shutdown ends. In the labor market, the unemployment rate remained relatively low through August. Job gains have slowed significantly since earlier in the year. A good part of the slowing likely reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. Although official employment data for September are delayed, available evidence suggests that both layoffs and hiring remain low, and that both households' perceptions of job availability and firms' perceptions of hiring difficulty continue to decline. In this less dynamic and somewhat softer labor market, the downside risks to employment appear to have risen in recent months. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index suggest that total PCE prices rose 2.8% over the 12 months ending in September, and that, excluding the volatile food and energy categories, core PCE prices rose 2.8% as well. These readings are higher than earlier in the year as inflation for goods has picked up. In contrast, disinflation appears to be continuing for services. Near-term measures of inflation expectations have moved up on balance over the course of this year on news about tariffs, as reflected in both market and survey-based measures. Beyond the next year or two,
Bitcoin pretty much flat
however,
right now.
most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to lower the target range for the federal funds rate by a 1/4 percentage point to 3 3/4 to 4%.
Single wins or not.
Higher
bro.
tariffs
You
are
guys
pushing up
crazy.
prices in some categories of goods, resulting in higher overall inflation. A reasonable base case is that the effects on inflation will be relatively short-lived, a one-time shift in the price level. But it is also possible that the inflationary effects could instead be more persistent, and that is a risk to be assessed and managed. Our obligation is to ensure that a one-time increase in the price level does not become an ongoing inflation problem. In the near term, risks to inflation are tilted to the upside and risks to employment to the downside, a challenging situation. There is no risk-free path for policy as we navigate this tension between our employment and inflation goals. Our framework calls for us to take a balanced approach in promoting both sides of our dual mandate. With downside risks to employment having increased in recent months, the balance of risks has shifted. Accordingly, we judged it appropriate at this meeting to take another step toward a more neutral policy stance. With today's decision, we remain well positioned to respond in a timely way to potential economic developments. We will continue to determine the appropriate stance of monetary policy based on the incoming data, the evolving outlook, and the balance of risks. We continue to face two-sided risks. In the committee's discussions at this meeting, there were strongly differing views
Lost
about
the
how to
POC.
proceed in December. A further reduction in the
my
policy
God.
rate at the December meeting is not a foregone conclusion. Far from it. Policy is not on a preset course.
Well, there's a 786 value area
At
low.
today's meeting, the committee also decided
Major
to
key
conclude
level,
the
guys,
reduction
major key
of
level.
our aggregate securities holdings as of December 1. Our long-stated plan has been to stop balance sheet runoff when reserves are somewhat above the level we judge consistent with ample reserve conditions. Signs have clearly emerged that we have reached that standard. In money markets, repo rates have moved up relative to our administered rates, and we have seen more notable pressures on selected dates, along with more use of our standing repo facility. In addition, the effective federal funds rate has begun to move up relative to the rate of interest on reserve balances. These developments are what we expected to see as the size of our balance sheet declined and warrant today's decision to cease runoff. Over the 3.5 years that we've been shrinking our balance sheet, our securities holdings have declined by $2.2 trillion. As a share of nominal GDP, our balance sheet has fallen from 35% to about 21%. In December, we'll enter the next phase of our normalization plans by holding the size of our balance sheet steady for a time, while reserve balances continue to move gradually lower as other non-reserve liabilities, such as currency, keep growing. We will continue to allow agency securities to run off our balance sheet, and will reinvest the proceeds from those securities in Treasury bills, furthering progress toward a portfolio consisting primarily of Treasury securities. This reinvestment strategy will also help move the weighted average maturity of our portfolio closer to that of the outstanding stock of Treasury securities, thus furthering the normalization of the composition of our balance sheet. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting our maximum employment, bringing our inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Oh, yay, the questions. Is Mark Zuckerberg here today? He was here last time.
Nick Timmeros of the Wall Street Journal. Chair Powell,
Is that him?
Are you uncomfortable with how market pricing has assumed a rate cut is a foregone conclusion?
Is that Mark?
at your
Did he
next
grow his
meeting?
hair out?
Well, as I just mentioned, a further reduction in the policy rate at the December meeting is not a foregone conclusion, as I've just said. So I would say that needs to be taken on board. We had, just say this, 19 participants on the committee. Everyone works very hard at this and takes their obligations to serve the American people very seriously. And at a time when we have tension between our two goals, we have, strong views across the committee. And as I mentioned, there were strongly differing views today. And the takeaway from that is that we haven't made a decision about December. And, we're going to be looking at the data that we have, how that affects the outlook
Tapping
and the
into the
balance of
value
risks.
area
And
low.
I'll just say that.
You and some of your colleagues have framed last month and maybe today, I won't put words in your mouth, there's a risk management exercise. At what point do you conclude that you've taken out enough insurance? Are you looking for some kind of improvement in the outlook? Or could this unfold along the lines of last year, where you made a sequence of adjustments and then waited to gather more information?
So the way I've been thinking about it is the risks to the two goals. For a very long time, the risk was clearly of higher inflation. And then that has changed now. And as we saw particularly after the July meeting, we saw the downward revisions in job creation, we saw a very different picture of the labor market, and it suggested that there were higher downside risks to the labor market than we had thought. And that suggested that policy, which we had been holding at a I would say modestly, others people would say moderately restrictive level, needed to move more in the direction over time of neutral. if the two goals are sort of equally at risk, then you ought to be at neutral, because one of them's calling for you to hike and one of them's calling for you to cut. So if that got back into balance, then you'd want to be roughly at neutral. So in that sense, it was a risk management. And I would say the same about today, sort of the same logic. But as I mentioned, going forward is a different thing.
Claire.
Claire Jones, Financial Times. Thank you for taking this
Financial
question.
Times.
We've just heard from you that the discussion in December and the conclusion of the discussion is not a foregone conclusion. I'd like to just dig into that a little bit more about what sort of arguments were brought up. Was there any consideration, for instance, of the investment we're seeing in AI and some of the generation of household wealth through rises in stock prices related to the AI boom? Thank you.
I got you,
You know, I
BTC
wouldn't say
Phil.
that's
I'm trying to buy it right
that's
now.
a factor in everyone's assessment of the economy.
Buy it
I wouldn't
back
say
up.
it's the driving factor. I don't think for anybody. You know, I guess I would say it this way. Once again, I would just point out that we have the situation where the risks are to the upside for inflation and to the downside for employment. We have one tool. It can't do both of those. You can't address both of those at once. You've got a very different situation. So you have some people have different forecasts, right? So they'll forecast faster or slower progress on one or the other. And they also have different levels of risk aversion. And, you know, some will be more averse to inflation overruns, and some will be more averse to underruns of employment. And so you put that together, and as you can see from the SEP and from the public discussion that goes on between the meetings when more participants
Surely
let them
this
talk,
has to hold,
they're very
right?
disparate views, and they were reflected in strongly differing views in today's meeting, as I pointed out in my remarks. And that's what leads me to say that, you know, that we haven't made a decision about December. You know, I always say that. It's a fact that we don't make decisions in advance. But I'm saying something in addition here, is that it's not to be seen as a foregone conclusion. In fact, far from it.
Can I just ask a quick follow-up on QT? How much of the fund impressions we've seen in money markets are related to the U.S. Treasury issuing more short-term debt?
You know, that could be one of the factors, but the reality is we've seen, you know, the things that we've seen, higher repo rates and federal funds rate moving up. These are the very things that we look for. We actually have a framework for looking at, you know, what the place we're trying to reach.
Oh, no. This happened last time. Come on. I learned last time, guys, it was not us. It was there was no way around to fix this last time. Unbelievable. Come on. Come on. Oh, God. Round two. Round two. Man, I thought it was usually me. It's usually me with the tech problems, guys. But this was, I saw everybody have this problem last time. There was literally no way to fix it. But there we are, guys, pushing into our key level here. Losing this level, guys, is not good in my opinion. I'm going to be looking down to 107 to 108K. Surely this has to hold. Weekly, monthly, golden pocket, weekly MPOC, daily horizontal. Big support. Attempting to reclaim here, though.
There's not a lot of benefit to be
He froze the
you know,
market.
to be holding on to get the last few dollars, because, you know, again, with the balance sheets, the reserves are going to continue to shrink as non-reserve.
Why does this have to happen? Everybody, turn off the stream. We got to open up the bandwidth, guys. Yeah, it doesn't matter. We tried to move it. Shout out to It's Happening says, are you watching on YouTube? It's we tried to go back and forth, and it turned.
Moves
There we
away
are.
from the 2% target. Seems to be, you know, that there are these mounting downside risks to the labor market. But if those don't materialize and the labor market either stabilizes around current employment levels or even starts to strengthen somewhat, how would that change your perception of how much interest rates need to fall from here? Would you then be a bit more concerned about?
Come on. Everybody turn off the stream. Open up the bandwidth. Open up the bandwidth. Come on. We got to get back up here, guys. We got to get back up here. Come on. Hold it. Hold it. Hold it. We're already losing the trend line, though. Need the quick reclaim there. Not lagging on my end. All right. Bear with me 1 second, guys. Let me see if I can pull this back up on YouTube. Bada boom. Oh, bear with me, guys. So annoying. This happened last time. I learned last time that we wasted our time trying to fix it because everybody literally had the same issue. Let's see.
Committee's ability to assess the state of the labor market and make the right policy decisions, and also how much is that factoring into the debate about.
We're back.
Yeah. So, we get, like I mentioned, what we get in the labor market.
Bear with me.
Some data in inflation, some data in economic activity, survey data.
Oh, God. Sorry, guys.
And, the fact that
No, it's everywhere. It's everywhere. It's just totally broken, guys. All right, this should be good.
say we're not going to be able to have the detailed feel of things. But I think if there were a significant or material change in the economy one way or another, I think we pick that up.
Sorry about that, guys.
Through this. So in terms of how it might affect December, it's really hard to say. December's the meeting's, I guess, 6 weeks away. We just don't know what we're going to get. If there is a very high level of uncertainty, then that could be an argument in favor of caution about moving, but we'll have to see how it unfolds.
Steve.
Steve Leisman, CNBC. Mr. Chairman, can you characterize the meeting in terms of, you said strongly differing views. Was this a close call, this cut, or was it a close call maybe the other way because you had dissents on both sides? Thanks.
So I was referring to the discussion about, to the extent it related to December. You saw we had two dissents, one for 50 and one for no cut. So, that was a strong, solid vote in favor of this cut. The strongly differing views were really about the future. What does that look like? And I think people are saying, they're noticing stronger economic activity. Forecasters generally, broadly, have raised their economic growth forecasts for this year and next year, in some cases quite materially. In the meantime, we see, a labor market that's kind of, I don't want to say stable, but it's not clearly in motion. It's not clearly declining quickly in any case. It may be just continuing to gradually cool. And again, people have different forecasts and expectations about the economy and different risk tolerances. And so there's you read the SEP, you read the speeches, there are differing views on the committee, and to the point where I said what I said.
And just to follow up on the balance sheet, if you stop the runoff now, does that mean you have to go back to actually adding assets sometime next year so that the balance sheet doesn't shrink as a percent of GDP and become a tightening factor?
So you're right. The place we'll be on December 1 is that the size of the balance sheet is frozen. And as mortgage-backed securities mature, we'll reinvest those in Treasury bills, which will foster both a more Treasury balance sheet and also a shorter duration. So that's what. In the meantime, if you freeze the size of the balance sheet, the non-reserve liabilities, currency, for example, they're going to continue to grow organically. And because the size of the balance sheet is frozen, you have further shrinkage in reserves. And reserves is the thing that we're managing that has to be ample. So that'll happen for a time, but not a tremendously long time. We don't know exactly how long. But at a certain point, you'll want to start reserves to start gradually growing to keep up with the size of the banking system and the size of the economy. So we'll be adding reserves at a certain point, and that's the last point. Even then, we didn't make decisions about this today, but we did talk today about the composition of the balance sheet, and there's a desire that the balance sheet be right now it's got a lot more duration than the outstanding universe of Treasury securities, and we want to move to a place where we're closer to that duration. That'll take some time. We haven't made a decision about the ultimate endpoint. But we all agree that we want to move more in the direction of a balance sheet that more closely reflects the outstanding treasuries, and that means a shorter duration balance sheet. Now, this is something that's going to take a long time and move very, very gradually. I don't think you'll notice it in market conditions, but that's the direction of things.
Janelle Marte with Bloomberg. How are officials interpreting the latest CPI report?
You have further
So
shrinkage
some components came in
reserves.
lower than
Reserves is the thing
expected,
that
but core
that we're managing
inflation
that
was
has
still
to
at
be ample.
3%.
So
At
Sorry,
this
guys.
moment, what are you learning about the drivers? And also, do you view that the risks are greater that the Fed makes a mistake on employment or inflation?
So the September CPI report, we didn't get PPI after that, which is important for translation into what we look at, which is PCE inflation, but we can still make a pretty good assessment of what that will be. When we get PPI, there might be some adjustments, but so directionally, it was a little softer than expected, and we always break it down into the three components. So basically, you've seen goods prices increasing, and that's really due to tariffs. And that's compared to a longer run trend of very, very mild deflation in goods. So that's
So did
moving
I. I thought he was
inflation
speaking
up.
over her, too.
On the other side of that, good news that housing services inflation has been coming down and is expected to continue to come down. So if you remember a couple of years ago, that's the one that we kept expecting it to do that. Now it's been doing that for some time, and we expect to continue that. That leaves the biggest category is services other than housing services. And that's kind of been moving sideways
Trying to get back above that
over
trend
the
line.
last few months. But a significant part of that is non-market services.
Swept out
And
the
we don't take a
liquidity
lot
down
of
here.
signal about the tightness of the economy from that. So if you add all that up, a couple things to say. One is that inflation away from tariffs is actually not so far from our 2% goal. We estimate, people have different estimates of what that is, but it might be, 5 or 6 tenths, and so that if it's 2.8, then core PCE, not including tariffs, might be 2.3 or 2.4 in that range, something like that. So that's not so far from your goal. So that we look at that, and the thing about tariff inflation is the base case is that it will come, and it probably will increase further. But it is that it will be a one-time increase. And, we've been very focused for all of this year at making sure that that's the case and thinking carefully about what are the pathways through which it could become something else, troublesome inflation. One of those would be, a really tight labor market. We don't see that. Another could be inflation expectations moving. We don't see that. So I think, we're watching this very carefully. I think it's not the case that we're just assuming that it's going to be a one-time inflation. We understand fully that this is a risk we have to monitor and ultimately manage.
With the stubborn in services inflation, what are some of the things that the Fed could do to address that, and especially when we're seeing potentially labor supply challenges?
Sorry, say the first.
The stubborn services inflation that you mentioned.
Services inflation, yeah. Well, again, the part of services inflation that isn't coming down as we would like it to is the non-market part of non-housing services. And overall, that's just something that we expect will come down. The non-market part of it should come down. It largely reflects higher stock prices and financial services that are imputed rather than actually paid is a big part of
the
that.
POC.
But also just, we think policy is still modestly restrictive in my telling. So that's the kind of thing that should lead to a gradually cooling economy. That's one of the reasons you see a gradually cooling labor market is because, the Fed policy is modestly restrictive. So that should also help get that. I want to say, though, we're absolutely committed to returning inflation to 2%. If you look at longer-term surveys or market pricing, you will see that's a credible commitment, and there should be no question that that's where we're going.
Chris.
Great, thank you. Chris Rugaber at Associated Press. So there's a big investment boom in AI infrastructure right now, as you know, and wondering if the existence of such a boom would indicate that rates are not that restrictive after all, and could further rate cuts at this point perhaps fuel an excess level of investment there or market bubbles? How is the Fed thinking about that?
So I don't think that you're right. There are a lot of data centers being built and other investments being made around the country and around the world. big U.S. companies are just investing a lot of resources in thinking about how AI, which will be based on those data centers, run through those data centers, is going to affect their businesses. So it's a big deal. I don't think that the spending that happens to build data centers all over the country is especially interest sensitive. It's based on longer run assessments that this is an area where there's going to be a lot of investment and that's going to drive higher productivity and that sorts of things. I don't know how those investments will work out, but I don't think they're particularly interest sensitive compared to some of the other sectors.
And then just a quick follow-up. You mentioned that you do have data that you're looking at for inflation and growth in the absence of government data. Could you give us a sense? I think we know a lot about the jobs data that's out there. Can you give us a sense of what you're looking at to track inflation in the absence of government data?
Shout out to AA Brown.
So it's a lot of things, and it doesn't replace government data, but you know all of these. I'll just mention some of the many names: Price Stats, Adobe, and others. For wage inflation, there's ADP data. On spending, you're going to ask about spending at some point. There are lots of other things that we look at, but it's many different sources, and again, including what we get out of the Beige Book, which will be sort of come out mid-cycle as always. And it doesn't replace the government data, but it gives us a picture. Again, I think if something material were happening, if there were material developments, I think we would pick that up.
Not
I
too
don't
bad
think we'll
right
be able
now.
to have the very,
Stay on
the
top
very
of that trend
granular
line.
understanding
Sweat the
of
liquidity,
economy,
got back above.
while this,
With 15-minute bull
while this
bibs.
data is not available.
Howard?
Howard Schneider with Reuters. Thank you. I just wanted you to elaborate a little bit on what you said a moment ago about the continued shutdown, making it more difficult to make a move in December, and that may make you more cautious. To the degree you are relying on private data that isn't the gold standard, or that you're relying on your own surveys or the Beige Book, do you worry at some point you're going to have to start making policy by anecdote?
This is a temporary state of affairs, and we're going to do our jobs. We're going to collect every scrap of data we can find, evaluate it, and think carefully about it. And that's our jobs. That's what we're going to do. If you ask me, could it affect the December meeting? I'm not saying it's going to, but yeah, you could imagine that what do you do if you're driving in the fog? You slow down. So that could or could not. I don't know how that's going to play into things. We may get the data may come back, but there's a possibility that it would make sense to be more cautious about moving. I'm not committing to that. I'm just saying it's certainly a possibility that you would say we really can't see, so let's slow down.
Back up there.
As a follow-up in the debate on this meeting, we saw recently some pretty big layoff announcements coming from Amazon and others. Wondering if that figured into the discussion at all, that you're starting to see this tension between growth and employment starting to be resolved, to the detriment of employment. And secondly,
get off your phone. Pay attention.
Some of the stress is starting to appear in the bottom spur of the K, as they call it.
Jennifer.
Household health premiums that are going to be
I know you hear
possibly
me.
going up quite substantially.
See, you're just looking at me like
Has
that?
that
Come on.
started to become a factor in your policy discussion?
So those are both things that we're watching very, very carefully. To start with the layoffs, you're right. You see a significant number of companies either announcing that they are not going to be doing much hiring or actually doing layoffs, and much of the time they're talking about AI and what it can do. So we're watching that very carefully, and yes, it could absolutely have implications for job creation. We don't really see it in the initial claims data yet. Now, it's not a surprise that we don't. It takes some time for it to get in there, but we're watching that really carefully. But again, don't see it yet in the initial claims data.
She's like, dang it, I gotta sell
the
now.
K-shaped economy
She's in a short.
thing, I would say the same thing or similar thing. We are, if you
She's part of the premium
listen
Discord.
to the earnings calls or the reports of big public consumer-facing companies, many of them are saying that there's a bifurcated economy there, and that consumers at the lower end are struggling and buying less and shifting to lower-cost products, but that at the top, people are spending at the higher income and wealth, and so much anecdotal data on that, and so we think there's something there. So,
Edward.
Fighting that trend line.
Thank you. Edward Lawrence with Fox Business. So, Mr. Chairman, I want to take another crack at the further reduction of rates is not a foregone conclusion. So in December, you said, far from it. So if a cut might not be on the table for December because of lack of data, what does the other concerns then stem from? So if it's not lack of data as the reason December is not a foregone conclusion, what other things could be the concern then?
Well, the perspectives of people on the committee that, we've now moved 150 basis points, and that we're down into, you're into that range between 3 and 4 where many estimates of the neutral rate live in that 3 to 4% area. You're there now. You're above the median number for the committee, but I think there are people on the committee who have higher estimates of the neutral rate, and that's you can argue these positions since it can't be directly observed, the neutral rate. So, I think for some part of the committee, it's time to maybe take a step back and see whether there really are downside risks to the labor market, or see whether in fact the growth, that the stronger growth that we're seeing is real. Ordinarily, the labor market is a better indicator of the momentum of the economy than the spending data. That's the lore. In this case, that gives a more downbeat read. So people just have, again, we've cut 50 more basis points in the last 2 meetings, and there's a sense like, from some, let's pause here, kind of thing, and a sense from others.
Absolute battle at the
ahead,
trend
but
line, guys.
That's why I say differing views, strongly differing views.
Yeah, so on that division then you're talking about going forward, so what's more important in this division? Is it inflation risks, is it employment risk, or is there a deeper philosophy division among the board?
Look, everybody on the committee is deeply committed to doing the right thing to achieve our goals, maximum employment and stable prices. You have differences on how to do that, and as I mentioned, some of that is different forecasts, but a lot of it is also different risk aversions to the different variables, which is common through all Federal Reserves. People just have different risk tolerances, let's say. So that leads you to people with disparate views. You will know that from the speeches you've been listening to from my colleagues, and so we're at a place now where we have in fact cut 2 more times. And we're 150 basis points closer to neutral, wherever that may be, than we were a year ago. And so there's a growing chorus now of feeling like maybe this is where we should at least wait a cycle, something like that. That's what it is. It's just what you think it would be. It's and again, you've seen it in the September Summer of Economic Projections. You've seen this in the public remarks of FOMC participants, and now I'm telling you that's what you can expect that in the minutes. And I'm just telling you that's what happened in the meeting.
Elizabeth.
Thank you so much. Elizabeth Scholzley with ABC News. What is your explanation for why the job market is weakening right now, and what will this rate cut do to improve the job market?
So
Shane, wake me up too. I'm gonna take a nap with you.
There are 2 things affecting the job market, and one of them is just a dramatic reduction in the supply of new workers. And that's 2 things. That's declining labor force participation, which is a cyclical thing, and then there's declining immigration, which is just a big policy change that actually began in the last administration and it has been accelerated now. So a big part of the whole story is that supply side story. Okay. In addition, labor demand has declined, and the unemployment rate has gone down, meaning that demand for workers is going down a little more than supply. So that's what's going on, but it is mostly a supply function. It's mostly a function of the change in supply, I think, and many people think. So the question then is, what does the our tool do, which supports demand, and and I would just say, when you're in a situation where job creation, if you adjust for likely overcounting in the way that BLS does its work is pretty close to zero. So maximum employment doesn't, on a sustainable basis, doesn't, if you're creating zero jobs, if it's in equilibrium, if it's in balance, it's a pretty, as I said before, a pretty curious balance. So, I thought, and many of my colleagues thought, in fact, you've seen the last two meetings, that it was appropriate for us to react by supporting demand with our rates. And we've done that. We've reduced so that rates are looser. I wouldn't say that they're accommodative right now, but they're meaningfully less tight than they were. And that should help so that at least the labor market doesn't get worse. So it's a complicated situation, and some people argue that this is supply and we really can't affect it much with our tools, but others argue, as I do, that there is an effect from demand and that we should use our tools to support the labor market when we see this happening.
You also talked about tariffs causing a one-time price increase. Should American household consumers expect that inflation will continue to go up this year because of those tariffs?
Lab-grown diamond handing at this point is crazy.
The expectation is that there will be some additional increase in inflation because it takes a while for tariffs to work their way through the production chain and finally get to consumers. And we see this now from the tariffs that were put in place now many months ago. We see those effects, but if you put tariffs in effect, and they've been coming into effect consistently in February, March, April, May, and that's all happening. So that'll continue to happen for some time, probably into the spring. These are not big increases, though. These are a tenth or so on inflation. They may be big increases on a particular product that's been tariffed, but overall, these are fairly modest. I think some projections go, we're at 2.8% inflation. You might get 2 or 3 more tenths or 4 more tenths maybe. But then, as all of the tariffs are in, they stop generating inflation. You've had a one-time price increase. As long as you're not, at least this is the theory, this is how we believe and hope that it will work out. Once the last tariff is put on something, at that point, it becomes a higher price level, but it stops going up, if you will. Prices stop going up. They'll just be at that level. And then measured inflation will come back down to non-tariff inflation. As I mentioned, non-tariff inflation is not so far from 2% now. Now, consumers are not interested in that story. Their prices are higher. More than that, the reason they're so unhappy about inflation is the inflation that we had in 2021, 2, and 3. Because you can say that prices aren't going up as much, but that doesn't mean people aren't feeling those higher prices from the inflation we had 2 or 3 years ago. They are, and that's, I think, a large part of why the public, if you sample people, inflation is still very much making people quite unhappy. Even, and it's nice that, that prices are not going up as fast as they were, but they're still much higher than they were. And it'll take some time for that effect to wear off. As real incomes rise, it will feel better over time, but that's going to take time.
Michael McKee from Bloomberg Television and Radio. Do you have any concerns that equity markets are or are close to being overvalued at this point?
We don't look at any one asset price and say, hey, that's wrong. It's not our job to do that. We look at the overall financial system, and we ask whether it's stable, whether it could withstand shocks, right? So, banks are well capitalized, while some households are clearly under stress. In the aggregate, households are in good shape financially, relatively manageable levels of debt. At the lower income spectrum, you are seeing rising defaults, particularly around subprime auto, but nonetheless, in the aggregate, pretty good. You don't see too much leverage in the banking system or the financial system. It's a mixed picture, but it's not an overly troubling picture. And again, I'm not. It's not appropriate. We don't set asset prices. Markets do that.
Well, you must be well aware that by lowering interest rates, you're contributing to additional asset price increases. And I wonder how you balance the idea that lowering rates would help the labor market with the reality that it seems more likely to be stimulating increased investment in AI, which is the rationale for thousands of job cuts that have been announced in the last few weeks.
Yeah, I don't think interest rates are an important part of the AI, of the data center story. I think, people think they're great economics in building these data centers, and they're making a lot of money building them, and they think they have very high present value and all that sort of thing. It's not really about, it's not about 25 basis points here or there. We use our tools to support the labor market and to create price stability. That's what we do. That's our two jobs, right? So we're here by lowering rates at the margin, that will support demand, and that will support more hiring. And that's why we do it. Now, no 25 basis point or even 50 basis point hike is going to be a dispositive thing, but ultimately, lower rates will support more demand, and that'll support hiring over time. And
Potential
of course, we also
3-minute
have to be careful about this, which is what we've been doing.
Potential 3-minute money flow, 3-minute, 45-minute bullish market cipher B setup, short term. But if we get that green dot to print with the 3-minute money flow, might be able to squeeze up there a little bit.
Around inflation and the path ahead for inflation. That's why we're going. That's why the pace we're going has been a careful one.
Victoria. Hi, Victoria Guida from Politico. On AI, I'm just wondering, it seems like a lot of the economic growth that we've been seeing is fed by investments in AI. So how worried are you about what a sudden contraction in tech investment would mean for the overall economy? Is there enough strength in other sectors? And specifically, are there any lessons that you take from the 1990s in how you might approach what's happening right now?
Yeah, this is different. In the sense that the companies that are so highly valued actually have earnings and stuff like that. So if you go back to the 90s and the dot-com, these were ideas rather than companies, and so there's a clear bubble there. Whereas I won't go into particular names, but they actually have earnings, and it looks like they have business models and profits and that kind of thing. So it's really a different thing. The investment we're getting in equipment and all those things that go into creating data centers and feeding the AI, it's clearly one of the big sources of growth in the economy. Consumer spending also, though, has been, is much bigger than that and has been growing and has defied a lot of, negative forecasts, continuing to do so this year. Consumers are still spending. Now, it may be mostly higher-end consumers, or maybe skewed that way. But the consumer is spending, and that's a big chunk of what's going on in the economy, substantially bigger than AI. You could point to growth. I mean, actually, maybe growth as opposed to level, but consumer spending is a much bigger part of the economy.
And why do you think that the labor market is slowing so much, even though consumer spending is strong?
Why has it slowed so much? Well, what's happened is that the supply of workers has dropped very, very sharply due to mainly immigration, but also lower labor force participation. So, and that means there's less need for new jobs because there isn't this flow into the pool of labor that where people need jobs because there aren't those people now. So there's not a supply of workers showing up for jobs. In addition, demand has also gone down, and so has labor force participation has declined, which is more of a sign, in this case, of demand as well as trend. So I think you're seeing some softening. The economy's growing at a slower rate than it was, 2.4% last year. We think around 1.6% this year. It could have been a couple of tenths higher if not for the shutdown, and of course that will reverse. But you still got the economy growing at a moderate pace.
Andrew.
Hey there, Andrew Ackerman with the Washington Post. I wanted to ask if you could elaborate on how you think about policy in the context of the data drought. Does it make you inclined to stick with your plans as set out in September in the absence of the data that might change your mind, or does it make you inclined to proceed with added caution because of uncertainty?
Yeah, well, we'll know when we face that question, if we face that question. It'll probably be argued both ways, right? But I've said a couple times here that, if you really aren't getting information you really don't know, and the economy looks
Just
like
ask
it's solid
when
and stable and
somebody,
hasn't really changed,
somebody
there
needs
will
to
be an
sneak in
argument. I don't know
to
how
this press
persuasive it will
conference.
be, but there will be an argument.
Somebody's got to do it. I might be the
you know,
guy.
you
I
slow
might have to
down
be the guy.
when you can't see as far ahead. Others may argue, I mean, I'm not sure where this argument will come, but you're perfectly right that you could also argue, well, things haven't really changed, but you might not know that, you know. So I don't know whether we'll face this or not. I hope we don't. I hope by the time of the December meeting we're getting, you know, a better flow of data. But if we're going to have to do our jobs one way or the other.
Okay. I also just wanted to ask a FinReg question. I think several years ago you said the overall amount of capital in the system was
that
about
a single
right.
Windsor?
As the Fed moves forward with a revised Basel proposal, potentially changes to the GSIB surcharge, has that changed at all? Or are you planning to significantly reduce the amount of capital in the system? Thanks.
So there are discussions going on, I think, among the agencies, and I don't want to get ahead of those discussions. I continue to think that the level of capital, when I said that in 2020, was about right. And of course, there's been much capital added since then through various mechanisms. But I look forward to I know those discussions are really just getting going. They haven't come to the point where they're got a whole plan and that kind of thing. So I really don't have much to say on that.
Brian.
Hi, Chairman Powell. Brian Chung with NBC News. Is the weakness in the jobs market accelerating? And who's at risk if the interest rate cuts are not the effective medicine for a further slowdown in the labor market?
So we do not see the weakness, as you put it, the weakness in the job market accelerating. I would say, and again, we didn't get the September employment report, payroll report, but we look at, the
Gen Z, me and you, we're going to the next meeting, bro.
Unemployment insurance claims, initial claims, are reported at the state level, and we still get those, and we can accumulate them and get the national number. And there's really, in no story, you can look at the numbers. Same thing with the job openings we get from Indeed. There's just no story over the last 4 weeks. It's kind of stable. So you don't see anything that says that the job market is, or really any part of the economy is making a significant deterioration. Don't see that. You see more things like I mentioned, though, which is you see big companies making announcements of either of layoffs or of the idea that they won't need to hire. Their number of employees is not expected to go up over a number of years. There may be different people working there. They say that too, but they don't need a bigger head count. So you see those kinds of things. You don't see it in the aggregate numbers. The layoff numbers have not gone up, but job creation is very low. And the job finding rate for people who are unemployed is very low. But the unemployment rate is very low as well. 4.3% is a low unemployment rate.
So as you make these cuts, is it the lower income workers that you're thinking about, or those who might have their jobs automated? Is there a particular section of the labor market that you're particularly?
So we can't, our tools don't allow us to target any demographic or any income level and that kind of thing. I do think that people, we saw this during the global financial crisis and the long recovery. If you have a long period of very strong labor market conditions, it benefits people at the lower end the most. The last 2 or 3 years of that long expansion, people at the lower part of the income spectrum were getting the biggest benefits, and lots of things were happening in that space demographically, which were very constructive. And we're not at that place right now. But so, yeah, a stronger labor market is the best thing we can do for the public. It's also part of our job. It is half of our job, but it is absolutely the best thing we can do for people. Along with keeping prices stable, those two things. Inflation also hurts people on fixed incomes more than other people.
Courtney.
Hi, Chair Powell. Courtney Brown from Axios.
Chair Powell.
As you know, the 12 Reserve Bank presidents' terms are up for renewal at the end of February. I'm wondering if you can give us a timeline for when the board will consider those reappointments and whether we can expect everyone to be re-upped or if we can expect some changes.
So it's a process that we go through under the law. The way the law works is we have a reappointment process every 5 years for all of the reserve, each of them and all of them. We're in the middle of that process, and we're going to complete it in a timely way. And that's really all I can say.
Okay, thank you.
Daniel.
Daniel Davis.
How much
Agence
longer
France
should we
Press.
run this,
You've now
guys?
had
Let me know
dissent
what you
in three
want. We'll keep it up.
consecutive
I have no
FOMC
problem keeping
meetings,
it up,
but
but
in
let
this
me know if you
meeting
just
you
want to
had
see the charts,
dissent
do a
going in
little
both
breakdown, or you want to
directions,
just
and
keep
you
watching.
mentioned there's
Let me
strong
know.
disagreement
Let
over
me know
the
in the
future
chat.
path of rate cuts. Have these disagreements complicated your role presiding over the FOMC meetings, and if so, how?
I wouldn't say that, no. I think you have to take what comes, and what comes right now is, pretty challenging situation where we have, first of all, we have 4.3% unemployment. We have an economy that's growing close to 2%. So, overall, it's a good picture. It's a good picture.
Trend line's
But
insane.
in terms of our policy, we have upside risks to inflation,
Hold it.
downside risks to employment, and this is a very difficult thing for a central bank because
Charts are winning so far. Let me know.
One of those calls for rates
Powell
to be
or
lower,
charts?
one calls
Let
for
me
rates
know.
to be higher. We can't do both, so we have to balance the two. And so it's a challenging thing. And as we have worked our way through this process, you would expect that there would be a range of views across the committee on what to do and the speed with which we should do it. And that's what we have. That makes a lot of sense to me. All of these people are, people who take their jobs very seriously, work very hard at this, and just want to do what's right for the American people, but they have different views on what that is. And, it's an honor to work among people who care that much. It is, but I don't feel that it's unfair or anything like that. It's a time when we're making quite difficult judgments in real time, and I believe we'll get through this, and I think we've done sort of the right thing so far this year. I think it was appropriate for us to be careful about this. I think it would not be
All right, we'll let him
appropriate to
answer this
just
question and we'll
ignore
pull up
or
the
assume
charts.
away the inflation issue. At the same time, I think the risk of higher, more persistent inflation has declined significantly since April. And if we do wind up resuming rate cuts at some point, we will at some point. I think we're trying to get to the end of this cycle with the labor market in a good place and with inflation, on its way to 2% or at 2%. So that's all we're trying to do, and we're doing it under
this
quite
Tesla
challenging
bot.
circumstances and doing the best we can.
We'll go to Jennifer.
All right. I'm just going to mute it so we can stay current in case we want to pull it back up. But let's take a look at the charts here, guys. I'm just going to take a look at this from a chart perspective. Obviously, I know I wasn't really narrating this because I didn't want to talk over him too much. But can you guys all hear me? You're not still hearing Powell, right? I don't think you are. But we came down here, right? If I pull up the liquidation heat map here, you guys can see we did have a little bit of liquidity sitting down here below about $108,000. So when we were watching him, I'm on the other screen looking at that liquidity, and that is where I marked this out right here. And literally, like as I was pulling the line, we pushed down there. We did sweep some of that liquidity. We are now currently above this trend line. This is the key level, guys. If we could stay above this, we might be able to see that continuation of a little bit of a bounce here. Maybe the live stream ends, we see some crazy more volatility. I don't know. But this is the trend line, right? We swept out the liquidity. We came back up here, and you can see that on the liquidation heat maps, right? You can see that liquidity. We get the push down. We've now swept it. So we have swept a little bit of that. And on top of that, if we pull up our key levels here on that main volume profile, taking a look at the lower time frames. Someone said it in the chat, which is hilarious because it was exactly what I marked out here. Little bit of a liquidity sweep, perfect little SFP here, and we do have some bullish divergences down here at the value area low. Now, again, on a typical day, this would be like a very, very clean setup based off the volume profiles, deviate below the low, bullish divergences, get that nice little liquidity sweep. So if we could get back above this POC, we might be able to see a little bit more of a retracement to the upside. Losing this trend line is okay, right? Just like this, like a little wick below, that's totally okay. But we do not want to start spending time below $110,000, call it $110,800, right? We want to stay above that trend line. And we even looked at this before the live stream started. It's like, let's stay above this trend line. We lost it, but we wicked back up. And again, with that liquidity down below, it is looking like a liquidity sweep thus far. This does not necessarily mean at the end of the day, right, this does not guarantee that we have to go up to new all-time highs, but we could see that little bit of a continued bounce. We also had the 3-minute money flow crossing into the green, which is now back in the red, of course, with the 45-minute green dot looking to print. So we can get that green dot to print on the 45-minute with this 3-minute money flow. Maybe we can continue up, but we are absolutely toying with this extremely critical level of support, guys. And again, from a traditional chart perspective here, I have to say, right, like regardless of FOMC, I just think from a simple perspective, let's hold that trend line. I don't know if we'll lose it again, but at the end of the day, if we can reclaim that, that is the key level I want to hold. But again, right, some of the things that don't look super good here. 4-hour money flow starting to come out. So again, like maybe the liquidity sweep gives us a bounce, but we do have to be a bit careful for the continuation of a downtrend here based off the 4-hour time frame. On top of that, you have the daily red dot printing with the 80 and 90-minute money flow crossover into the red. 80-minute, come on, is already in the red. 90-minute is following suit. This is a market cipher B bearish setup. Doesn't mean you can't get the bounce off the liquidity sweep. But again, if this is going to be like the last sweep before you send it off into a new high here, not new all-time high, but a new local high above $116, $116,000, right? You're kind of hoping that this just fakes out back into the green, right? So like the chart, money flow coming out, daily red dot, not really looking good for a big continuation up, but we'll see, right? Maybe we can get the fake out. FOMC day could be looked at as a higher probability of a fake out. Look at this trend line, guys. Look at this dang trend line. Just doesn't want to lose. We do not want to lose this level. Just tapping it, tapping it. Stay above here. Come on. Give us that 3-minute green dot. Get that money flow back in the green. Print that 45-minute green dot. Come on, baby. Come on. Don't make me bring up that 1-second time frame. Don't make me bring that 1-second time frame up. Come on. All right, let me come into the chat. What did you guys think? Drop a hawkish or dovish in the chat if you could make sense of the backwards riddles that Papa Powell was saying. Let me know. Great analysis, Frankie. Shout out to Captain. I appreciate you, brother. That's what we're here doing every single day. Shout out to Saba says, after discovering your live streams, I'm nervous to trade without watching your live. Oh my God, she's dumping. She's coming back up. We're getting a bit of a recovery here on the 1-second time frame. Are we going to continue to break down? Are we going to 111,700, breaking the local low? Are we coming down? Are we coming down? Good Lord, guys. Let's pull a 1-second Fibonacci retracement here. Oh my God. Are we headed to the golden pocket? Is it possible? Are we going to do it? Let's see. Let's see. Set the alert. Come on. Are you going to do it, Bitcoin? Are you going to do it? Come on. Come on. We got to get back above. Okay, so let's see here. Dovish, hawkish, hawkish. Massive hawkish. Jedi Kirk says tap, tap, tap. Neutral as always. Hawkish, hawkish, hawkish. Bear dove, hawkish, dovish. Hawkish for sure. Jesse said bullish on turtle. Hawkish. We're going to die until December. Good Lord. Hawkish, hawkish, hawkish. Neutral, neutral. Loving the TA, Frankie. Shout out to Waffle Ninja. I appreciate you, brother. Thank you for that. Bear, dove, hawkish. Your 1-second TA gives me anxiety. Well, there's the golden pocket tap. Oh, my God. It's pretty funny. We did this last time. We were calling like almost every single move to every local golden pocket. Frankie was an announcer for the Kentucky Derby in his past life. Absolutely. I was also an auctioneer. No, are we going to get 110, 959, 110, 959? We're going to push it down to the bottom of the golden pocket. Come on, push it to the bottom of the golden pocket. Money flow coming up here on the 1-second. Come on, push that money flow up. Are we going to get the reversal? Can we get that money flow to continue us up here? Come on, give it to us, give it to us. Coming back down, revisiting the golden pocket. 110,961. Hawkish, but BTC still rallies. So yeah, guys, like again, I know that's a lot of word vomit that our boy Powell gives us a lot. But just from a, I do want to bring up the liquidation heat maps once again here on a bit of a higher time frame. I'm gonna pull up the monthly time frame here for the liquidation heat maps. And once that loads, I'll be able to, continue my sentence here. So, when we look at the higher time frame liquidity, guys, the next big area of liquidity is conveniently sitting down at about $106,000 below these lows, all the way down to about 104, I'll call it 105K. Oh, there's the there's the golden pocket tap. But we have that liquidity sitting down here again between about like in the 106 to 105K zone. This does get pretty dang close to the key level that I brought up earlier today, pulling our fib from the $74,000 low all the way up. Or I'm sorry, wrong low. This low right here. So you can see, right, like maybe we sweep that liquidity into the 786 at about 104K. And then again, right, if we do end up losing that 104K level, we're looking down towards the $102,000 50-week moving average. Let me pull the 50-week up really quickly here just to get an idea of where this thing is sitting. Did I miss? Oh, no, I got it. Yeah, so it is sitting right there, right, between that $102,000 zone where we have the weekly MPOC, or the weekly MPOC, the weekly, the daily MPOCs, right? Like this massive confluent zone right here. this is like, I mean, when we talk about this, right, it's like if you're not going to come down and sweep out these lower levels, like this is the last place to bounce, in my opinion. It's going to be that 786, and kind of how we can see that potentially play out, right? You front run this bigger level down here, right? Because I would assume, right, there's probably a lot of people looking for the test of $100,000 psychological level, right? But maybe if we want to front run them, if we want to front run them, right? Come on down here. 786 is at about 104K. We have the liquidity down below. We can look for potential liquidity sweeps into that 786, again, 50-week moving average. And then, that's going to be kind of the last level to bounce before we have to really start talking about potentially much lower prices for Bitcoin. Kind of the same thing we've been looking at, right? Some newer levels in here, but it's all in that same zone. Really, the larger zone sits between about $104,000 and $101,000. Like, if we lose this, guys, I have to be looking lower for Bitcoin, right? I have to be looking down towards 96, 97, 91, $92,000. So that's kind of the longer term outlook. But when we zoom in here, right, we do have opportunities to bounce off some of those local levels that we brought up earlier. So let me go ahead and hide some of this, right? If we do wind up losing this 110.8 level, we wind up breaking down out of this volume profile, I'm going to be looking down towards the 107 to 108K zone, right? Again, tons of confluence here, right? Weekly, monthly, daily. No daily MPOC. You have a weekly MPOC. So you have like a ton of confluence in here, right? 4 levels. So if we lose this range, locally I'd be looking down here, can't hold this, $105,000 to sweep out that liquidity, can't hold that, looking down to 102K. And the only reason I'm even looking at these lower prices, guys, is just because of the daily with that daily red dot with the 90-minute money flow crossover. But as always, we can just view this as a simple volume profile to keep things nice and clean, nice and simple. Here we are, right? At the end of the day, value area low, like, opportunities to look for a bounce back in there. But again, I would say losing this trend line is much more bearish for the 107 to 108K zone. So we'll see what happens here, right? We have the local range as well. Very similar, right? Loses value area low. We're looking down to that 108 to 107K zone. All right, let's see. Shout out to Patrick said they called it Uptober. Now look. Yeah, it's funny. Like, listen, like the, traditionally, October is a very bullish month. Uptober is a real thing. But, I'm just never looking at it. It's like, oh, it's October, we have to go up, right? Like, if the charts say we're going down, if we get some bearish news, something like that, right? Like, not every October is the same. Let's see. Up in November is a no-brainer, and it's actually funny. I saw somebody talk about, they'll start printing money in mid-2026, and that would be kind of the situation where we see the cycle extend, right? And again, that's really hard to predict, looking at something that's never happened before, but that is kind of the argument, right? Hopefully that's not the case. I pray that is not the case. Shout out to Infinite Team TA says, bing bong. Shout out to, he censored the bong. Shout out to Infinite Team TA. Thank you for the super chat, bro. Welcome in. We are in October. Yeah, I mean, I guess technically it was October, right? I mean, October, yay! Yeah. Lackluster. Breaking down below the trend line once again, guys. And again, these simple, like, this is just kind of the critical level of support, but, to be honest, zone number 1. And what do we talk about in the beginning of the stream, guys? It's like we come to the POC, we start pumping a little bit. It's like, are we getting excited over this? Not really, right? Why? Literally explained earlier. No bullish divergences, no real signals to look for the long, right? You have no lower lows here, no higher low. You have the higher low, but you don't have the lower low. No bullish signals here, right? So I always prefer to see that value area low taken, right? We came down, we swept that liquidity. We're still above this value area low. Maybe it's choppy as we try to get back above that trend line at 110.8. Maybe we chop around a little bit, but once we lose this, guys, looking back down here, 108,650 down to about 107,500 on all that confluence that we have down here. We'll see. Not looking good. And again, or I don't want to say not looking good, but 90-minute money flow, I mean, just in general, right, FOMC aside, like, this is not what we want to see, right? If we want to see a nice higher low for a massive higher high, we want to see the red money flow wave crossing green with a daily green dot. We have the opposite. We have a daily red dot, and we have the 90 and 80-minute money flow coming out. So yeah, unless we get some crazy post-FOMC volatility that just snaps us back up, the charts and market cipher B are definitely pointing towards a potential continuation down. Throw Uptober, the market regurgitated. Yeah, it was like, it's a good way to put it. Just puking those red candles. It's so over. No, wait, we're back. Wait, never mind. Yeah, it's again, it's like, I never like to come up here and point out the bearish case, guys. But it's like, all I can say is like, listen, if people get mad, right? A lot of people get upset when you say it's going down. But I'm just pointing out what's on the charts, right? It's very binary. If I had the bullish divergences with a massive red wave crossing into the green, I'd feel a lot better about massive bounces from this level. So hopefully that's the case. We'll hold on top of this key zone. If we lose it, looking down here, lose that, we're looking down towards about $104,000. BTC dominance is going to crash. Time for alts to have their day. Shout out to, I don't know how to say that name. But yeah, checking in. I checked in on dominance during the live stream there. Not really huge update on dominance here. I'll pull it up on the alt chart so we can get all our TA here. We're just still kind of in the same spot here, right? Daily money flow still continuing up here. We have the daily red dot, but when we're looking at the overall trends here, right? Money flow crosses red. You look for the lower highs and lower lows. Money flow will always indicate the longer term trend. When that money flow turns red here, this is letting us know that any bounces are very likely to be lackluster for lower highs and lower lows for the downtrend to continue. You can see that. Money flow crosses here. Look to go to lose the POC, look to go to the value area low, lackluster bounce, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower high, lower low, right? Now we have the daily money flow crossing green, right? Still continuing up. We have a daily red dot, but that does not indicate trend necessarily, right? It indicates ebbs or flows. Now I hope, right? We're already tapped into the golden pocket retracement, right? So we technically have tapped these levels. But with this daily money flow, we do have to be careful of like higher lows and higher highs continuing, maybe deeper into this resistance, or maybe even up to this golden pocket 786, sitting between 62.64 or 62.64 and 64.24. I hope we don't have to go all the way up there, right? But we'll have to see what happens with this money flow. But from a high time frame perspective, I would still say, right, 3-day red dot was printing there during the live stream. This is kind of what we're hoping for. If you can get that red dot on the 3-day, money flow is still coming out here. If you get the red dot on the 4-day, money flow is trending out here. So the high time frame trend, whether the lower high is here or if we have to come up and put the lower high in here, the longer-term trend still has an opportunity to continue to the downside until we flip that POC 786 at about 64.25%. What will altcoins look like if we do have to go up there? Well, it's probably not going to, not going to be outperforming Bitcoin, that's for sure, right? So we'll see, right? Just still kind of watching that daily money flow. It's a lower time frame that could continue the local trend up, but from a high time frame, we're hoping that this continues out with money flow and we get those high time frame red dots. All right, don't forget to smash that like button, guys, if you appreciate these FOMC live streams. A little bit of a kind of boring one. It's kind of like I'm just kind of ping-ponging around, honestly. Like we got the little dump there, but again, that was not something that wasn't on the charts, right? Like we just look at the simple volume profile, guys. When I look at my short position, right? When I take that short position that I showed earlier, and we talk about why I'm taking that short or what my plan is for that short, right? I'll even hide all of these key levels, and I'll just break it down nice and simple. I'll hide this. I'll hide everything except for the volume profile, right? I'll hide this, hide this, hide this. Hide this, hide this, hide this, right? When we look at this from a volume profile perspective, right, what are we looking at, right? The whole thought process of this trade that we talked about yesterday, right? I'll just pull up a short position here. Come on, right? Short about somewhere right here, right before the actual drop to the downside. I think my entry was like right here, right before the drop. The thought process there is let's see this as, and the original setup in the Discord was actually from up here, right? But the thought process for those trades is always going to be deviate above the high, get back into the range, can't break out. At that point, you're anticipating the POC, which was our first key level of support, right? And then after that, you lose the POC, you're looking to go down to the value area low. And you can just see how perfectly that has played out, even if you just look at the original setup. I had to catch a little bit of a later setup because this set up at 2:30 in the morning, so obviously wasn't on the charts. But again, it's like, a lot of people will be like, oh, it was something Powell said that pushed us down there. And it's like, I don't know, maybe, right? But like this was the plan all along, which is why it's like this is never a place where I would look for fresh shorts, right? Where were we looking to short? Days ago, right? Up here at the value area high. What do we look for at the value area low? Well, typically we're looking for longs. We still need the confirmations, etc. But it's nothing that wasn't on the charts, right? You also had the 4-hour money flow coming out, even your 2-hour money flow coming out. And even yesterday, we saw that 80-minute money flow coming out with the daily red dot incoming, indicating that downtrend would likely continue. And you just have the laws of the volume profile on your side. Like textbook volume profile trade. High probability move to the POC, lose the POC, fill the range in full. And that's why I'm saying, like, you got to hold on top of this level, right? Like, we wind up losing that trend line, decisively, right? And again, wicks are okay. But, if we wind up starting to lose this trend line, we can't get back above, right? Well, we might get rejected out of this range and come down to those next key levels of support, right? Where we have the liquidity sitting down below about $106,000, right down here. So that's just like simple thought process, right? So like as that 4-hour money flow comes out, am I just going to close my short and full here? Well, no, I'll probably just take some profit, move my stop loss into profit, right? That way, if we are going to break down out of this range and continue on, I can continue to capitalize on that trade. And again, money flow is helping me identify that, right? Like how would I know if I saw if I saw massive bullish signs here with money flow coming up, maybe I'd close the trade in full and flip long, right? But with this money flow coming out, at least based off the charts, unless we get post FOMC volatility and it just rips out of nowhere and all the money flow fakes out, the charts would be telling me that the continuation down is the higher probability, right? And then if it's not and we're wrong, guess what? We'll get stopped out in profit and we'll still make money on that trade and the long will continue to pay us out. My long from lower, that is. Not this long, but that's the thought process, right? So it's like, it's all on the charts, right? It's like, oh, he said something bearish, so we don't. It's like, oh my God. And this is why I always say, it's like, I think it's just like much easier to look at the charts, right? Because then you're like, oh my God, was this hawkish? Was this dovish? Everyone's like, oh my God, he's bullish. Oh my God, he's bearish. And like everyone goes back and forth. Oh my God, the bottom's in. We're so back. Bear market's here. It's like, nah, just pay attention to the charts, right? It's like we would have been expecting this if FOMC was not here today. We would just still be looking to get that full. Or I would personally still be looking to get that full fill of the volume profile. So with money flow here, we'll see if we can get that continuation down. I would say, honestly, the invalidation for that is, crack the highs. You got to get the fake out on all your money flow, get back above this trend line, which right now sits at about 110.9, right? So like pretty much you got to get back above the low, flip the POC, push into the highs. And then we could deal with the resistance that we have up here. So like, who knows? We might just continue to range around here and it's like, let's pull our fib from the high to the low. Here's your 786 Fibonacci retracement in confluence with your value area high. Like, who knows? Maybe we range around here, right? Like, there's always team up, team down, never team sideways. This is oftentimes where the bread and butter, where the meat and potatoes is, right? Long and up, short and down. So if we get back up here, I want to be very careful around these Fibonacci retracements because if this money flow is coming out, it's indicating the overall trend, overall trend is going to continue down. Doesn't mean you can't get bounces off the value area low, but overall, you're going to be looking for lower highs and lower lows, which the real level to look at that on is the Fibonacci retracement, golden pocket, 113.6, up to about 786 at about 114.8. But of course, you have to understand your value area high is there. And if we don't respect this Fibonacci retracement right away, even if we came up here, right? Like, let's see, is this a deviation above the highs? Do we have a short setup? Maybe we can look for another perfect value rotation from the high to the low. If not, if it looks bullish, well, I'll hold my long position and look for the break to higher prices. If we get the pop to the upside, which again, the charts are not necessarily pointing to, and I hope that's clear, right? Like this money flow is factually coming out, right? It's not really my opinion, right? It's just like money flow is trending out, right? Like it's definitely not trending up, right? So if we did get up there, right, I'm definitely going to be careful for lower highs and lower lows. Once we get above there, we can look to take out this high and push into our macro golden pocket, which sits right here between 117 and 118.3. Pretty simple. And it would also be important, obviously, right, to stay on top of our value area low. If we are going to get a big push up there for a higher high, right, well, you got to maintain these highs, or these lows, rather, right? You got to maintain this trend line. But again, my money flow is not really pointed towards the break of that high. But if it happens, we'll be prepared for it. 103K then pump. I hope so. We'll be waiting for that level for sure. Why are you so high speed, Frankie? Shout out to Edward. It's just my natural cadence. I'm from New York. I'm a fast mover. I'm a fast walker. I'm a fast talker. I'm a fast lover. I don't know. Maybe, I don't know. Anyway, let's change the subject. The low is in. I hope so. We're starting to lose this value area low again. But even this, right, like, this is 30-minute. Yeah, 30-minute just chopped out there. We had the green dot, the red dot now confirmed. 45-minute green dot. This was the hope, right, to hold on top of your value area low and continue up. If you get that 45, this is local, right, for a retracement to the upside. I'm not saying this is calling for a massive move. But 45-minute green dot, 3-minute money flow crossover into the green. If we can get that, it was looking okay here, right? You're getting into the range, money flow crossover, but you just get the fake out, which is very common and happens a lot on the lower time frames. But if we can get this 45-minute green dot, oh, there it is. All right, well, now we just got to work on the 3-minute money flow, which is headed directly in the wrong direction here. So we'll see. But this is really these are the main levels to look at, guys. Value area low sits at 110.326. POC sits at 111.163. Value area high all the way up here at 119K. Obviously, we're very far away from that, but that's still the major range. And it's like, I wish this higher time frame money flow was just much more clear. Like, imagine this crosses into the red. It's like money flow is just becoming like, in this chop, is just very, very difficult. But it would make sense, right? Like, if this money flow stays in the green, you get the green dot, it's like you got to hold these higher lows. That's why this trend line is so important. Not only is it the value area low POC, which is major support, but it's also, you got to hold the uptrend. So we'll see what happens. Let's see. Chat is wild today. Yeah, shout out to Jesse. You guys have me cracking up during the lives, during Pavel speaking. You guys are crazy. It is kind of brutal, I'm not going to lie. I'm not a macroeconomist, and again, like, show me the charts, I'll tell you the news every single time. It's like, it's just the way I'm wired, and it's always worked out for me. I've never just been like, oh my God, I was so wrong on the charts. I should have been paying attention to this news. Said me, never in my life, right? So it's just like, and I'm not saying the news doesn't move the market. I'm not saying rate cuts don't matter. Obviously, all this is important. I just don't think it's, again, it's like, people pay attention to these news events and they're like, what happened? This bullish news event happened. Why aren't we pumping? And it's like, well, it's good long term, but like the charts were calling for a pullback here, whatever it is. So, I do fall asleep during those during those live streams. I'm just like, come on, bro. Either say something like legit or just put me to sleep with your backwards riddles. Can we check alts again? Yeah, shout out to Saba. I mean, we'll check in on Ethereum. Same thing on Ethereum too, right? Like, it had nothing to do with what I was listening to Powell say or anything like that, right? We come down here, we talk about the 1 hour. Okay, well, we have a 1 hour bull div, right? But is this like the most beautiful thing ever? You have the lower lows, you have the higher lows. Is this the most beautiful thing ever? No, right? Why? Number one, we were inside this volume profile. Number two, money flow is headed literally in the opposite direction. And what was the third thing? Oh, and we had no real level here, right? Like, if we were putting those bull divs in at the POC, it would have looked a lot better for me. And then what happens 5 minutes later, right? We get the little bull div, completely gets eaten up, and you push down towards the POC anyway, right? So just, very good to like avoid, right? Like, some people might you can't just long any bullish divergence that you see, especially before FOMC. Obviously you have the most bullish signal here and then craziness happens. You get stopped out of everything. But, I just like to bring this up, right? I'm not saying like, look, I was right. Like, I don't really care about that, but it's just like, if you're here to learn, right? It's like, why am I not super excited about that bull div? Well, it's like, let's just look at the chart here, right? It's like, all right, cool, bullish divergence, and that's why, like, you always want to have a checklist. It's like, all right, well, I have a bull div. We know it started printing. I'll push the candle up one more candle, right? It's like, oh, bullish divergence, right? But like, you're not at a significant key level of support. You just entered into your value area high from above, right? Which is more bearish. Money flow is coming out, indicating the trend will continue down, and again, like, no real key level here. So I prefer lower. If this was happening at the POC, right? Like, if we had this happening. Whoops. If we had this happening, like down here, well, then I would say, well, at least you're at a key level. And, of course, if money flow was going against me, I would still not feel great about that. But, just like if you were here in the beginning of the stream, like, take that as a lesson, right? It's like, why would I not be interested in this? It's like, well, you're longing. If you're going to expect to potentially even push up here to get rejected, like, what is your opportunity to gain here, right? It's like 0.9%, right? Only to potentially get smack back down and go back down to the key level anyway. And this is where patience comes in. Right? I think a lot of new traders are like, oh my God, bull div. Like, as soon as you find something that you can look for to anticipate a reversal, like, you're just always jumping in. But the context is so important, right? Like, to me, the context says, get into the volume profile. Sure, you can get a bounce off this bull div, but money flow continues out, trend continues down, and based off the volume profile, POC is the next stop. Obviously, almost exactly what we wound up seeing, right? You like front ran this POC by like a penny, and this might just not be the most accurate line drawn, right? So take that as a lesson, right? Like, the volume profiles is like, oh, but he's dovish, and like all the, it's just like, just show me the charts every time. It's so much easier, right? Like, take so much emotion out of things. It's like the chart is either giving you the signal or it's not. Sometimes it gives you mixed signals, but it's like you're not debating whether something sounds good or, what someone said. It's, oh my God, we're so back. Oh my God, we're so bullish. It's like, just show me the charts. Like, people could say whatever they want. It's like, I'm just going to go with the charts every single time. Let's see. And then you also have people like, well, they're going to cut rates, so we're going to pump from here. Why would you look for a continuation down? It's like, that's not just like, again, they cut the expected rate. Like, what oftentimes happens is you get the knee-jerk reaction, right? So it's like, it's very dangerous to just trade the news like that. Yeah, shout out to Burger Chase. Said Powell was talking about selling off the balance sheet for treasuries when the big dump happened. And that's sure, right? But it's like the sign of this continuation down was there. Like this is the thing, right? It's like you could see that happening before he was even talking. Like, we were looking at this chart before the live stream even started, right? So it's like, even then, right? It's like the TA is telling you where price wants to go. It's just like fill in whatever people think is moving price, right? Like just fill it in there, right? Like we were looking at this before the live stream, and then it's like he starts talking about stuff, you get the dump, and it's like, well, we were already anticipating this, right? So you can kind of see that stuff baked into the charts beforehand. It's not 100%, right? Of course. But again, it's like when you have the unexpected news, right? If he was like, oh my God, we're going to cut like crazy, you know, well, we messed up, we got to cut like crazy, like then maybe you get more of an aggressive reaction off the actual news, right? It's the same thing with the Trump tweets recently. It's like people will you know, someone commented, I said this before, somebody commented like, it's not dumping because you're stupid TA, it's dumping because he tweeted. And it's like, okay, well, cool. But the TA was literally telling me that days before the tweet even happened, right? So I was going to hold this trade in anticipation of filling this range in full, regardless of if the tweet came in or not, right? So it's like, sometimes it'll be a tweet, sometimes it'll be like some random news event, right? But it doesn't matter. Like the signs are already on the chart beforehand. By the time you try to short this tweet, right, where are you going to get filled? You're going to get filled, and then you're going to get absolutely washed out. I'd rather be holding the shorts from the high on the technical signals. And again, it's not 100%, right? But more often than not, it's like people just think like, oh, bad tweet, I'm going to get in right before it dumps and then go down, right? But by the time the tweet happens and the dump is happening, like where are you really going to get filled on that, right? You already missed the move. So that's just my 2 cents as a technical trader. Bitcoin just battling, absolute battle here at the trend line, guys. What the heck? Holding the value area low. Come on, 45-minute green dot. Come on. Give us something here. Get that 3-minute money flow back up. Cross it into the green. Get above the POC. Come on, give us the push-up. Don't hurt us too bad today. But again, even that would be like lower time frame. Let's still be careful with the high time frame money flow. Let's see. This was the worst and most excruciating bull market ever. Shout out to Ken. Yeah, for the altcoins, 100%. Definitely the most difficult cycle for altcoins. I could tell you that. Let's see. Shout out to Randy. Said, sorry, dude. TA can't predict black or white swan events or tweets. That's stupid. All right. I mean, I guess I'm just the luckiest person in the world then. It just happens to play out almost every single time. But yeah, TA won't be able to predict a black swan event. But again, point me to any black swan event, and I'll tell you what the signals were to go short, right? Like, what were we looking at up here to go short, right? And listen, if you're able to hear news and make money by trading that actual news, keep doing it, right? Like, forget the TA then. It's just not realistic, right? Like, it's like news a lot of the time is a retail trap. Now, a true black swan event, a true black swan, the definition of a black swan is something that cannot be predicted, which is why I say, right, like the TA points towards lower. We dumped off the FOMC a little bit, right? So the TA is right there. Sure, maybe he sound hawkish or whatever, right? But the TA already saw that happen. And in the case of the tweets here, it's like even show me like C19. You can't predict that stuff. That is 100% unexpected. But typically this stuff happens when there's bearish signs on the chart. So what were we looking at here, just for example, just to give a little education here? It's like the news is just like unnecessary emotion. We have the higher highs on the deviation above the profile. Lower highs on your momentum waves. Massive bearish divergences. We also had a liquidity sweep of this wick, right? This is what we were waiting for before price came anywhere. Oh, I'm sorry. Hang on. Let me zoom out a little bit. Yeah, we have the liquidity sweep above here, right? Or kind of like a failed auction. We have the bearish divergences. You're already deviating above your high. This is where I'm looking for shorts. You see the bear divs. You see the failed auction. You come back in. At that point, you're looking to get accepted into your profile and rotate to the fair value, right? Like that is the trade, whether Trump tweeted or not. And I was in this trade like a day or maybe 2 days before the tweet came out. Now, maybe, right, like if something super random happened, right, like a super unpredicted black swan, a true black swan. I don't know if I would consider that a black swan, but like a true black swan, not the charts are not going to be able to call everything, but more often than not, like the black swan event, like is just always going to be in line with what the charts are saying anyway, right? So I'm not saying it's like, of course, this is just plotting price action on a chart, right? It's just plotting the price movement on a chart. But it's all baked in here, right? Like understanding where the liquidity is sitting. This is really what moves the market, right? It's not like, and again, I'm not saying like if some crazy bad news came out that the market wouldn't dump, but what I am saying is chances are if we got some bearish black swan event to happen tonight, I'm already short from way before, right? And it just lines up way more than it doesn't. I'd say like 80% of the time you're going to be on the right side of it. So yeah, I mean, it's just a way, yeah. I mean, if it didn't work, right, then we wouldn't be able to trade and make money, right? No one would be able to trade and make money. So whatever. I mean, trade the news if you want. If you're making money trading the news, then do that. Then who cares? You found your edge, then do that. But for the most part, it's like I'll even pull up 2020 here. right? It's like if I just look at this and I say like, okay, if I'm looking at this TA live, am I longing up here? Anyone who watches the show, would I long right here? Probably not, right? I would be longing on the fear. I would be longing down here, right? Probably really bad news happening, whatever it is, right? As you come up here, I could just tell you right here, looking at the chart, like number one, I'm never longing, right? If price moves up 60%, right? I'm too late to that long. I'm not looking to long up here. If anything, I'm looking to long on maybe pullbacks. But the only thing I could really look for up here is shorts, right? So it's like, where'd it go? So when you start to look at this, right, it's like, all right, so what do I want to see here? Like, what would the setup be here? Well, what do we have on the daily time frame? Higher highs on price action, lower highs on your momentum waves, right? So like when I sit there on the chart and I do my TA, I'm looking at this and be like, all right, so what is the chart saying? All right, well, I have bearish divergences forming on the daily. It's a high time frame, that's bearish, right? Is that a place where I would just enter along? I mean, even if we have bullish signs, I would not be long in the top of these green candles, right? So for if anything, I'm not expecting the black swan. I'm not saying the TA can predict like, oh my God, there's going to be this massive drop. But maybe the plan, I mean, if I had to guess, right, back here, right, probably looking at this as somewhat of a volume profile, right? I'm not going to pull it exactly. I'm not going to nail it, right? But you come up to the value area high. You're looking for the bearish, or you have the bearish divergences. Like the only thing I could look for here is shorts, right? Maybe you have some Fibonacci retracements, right? You're pushing into your golden pocket. Maybe some of your lower time frame money flow is coming to the downside, right? So you're already expecting. Let's see if that was the case. I'm going to come into bar replay mode here so I don't have to keep going back. So you come into the golden pocket, value area high, right? Like I'm already fresh TA. This is my level of resistance, right? Bear divs on the daily. Bear divs on the 16-hour, money flow coming out. So am I looking for massive higher lows and higher highs? Am I longing resistance for higher lows and higher highs? Absolutely not, right? If this was our current price action, pretending I don't know that there's a black swan coming, if you watch this show or you know how to do TA, this is never a place you're looking to long. You're looking to long at the value area lows, right? And even all the way back here, I just kind of randomly pulled this very quickly. Deviate below the lows, get back into the range, POC, value area high. This is where we're looking for shorts. Do you have bearish confirmations to take that short? You have daily bear divs, 16-hour bear divs. Come on, TradingView. Even locally, you have the 4-hour bearish divergences in all of their glory here. Higher highs, lower highs, money flow coming out. This is a short setup. This is never something that I'm looking like, oh, we got long a breakout. Never. It's always going to be the only thing I can look for here. And again, I'm not predicting the black swan. The TA is not telling me like, oh my God, this black swan's going to nuke you down to 3K. But you might even just be looking at it as a volume profile trade down to 7K. Right? And then at the end of the day, what happens? You are short for a very, 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 very long time before the actual black swan happens, right? You're already holding this trade. Your TP1 would be the point of control. I can almost guarantee you that if we do get down to that POC, you're going to get. There you go, right? So it's not saying that the black swan event, like it's not telling you somewhere up here that I'm like, I think a black swan is coming. It's just I'm short off the charts, looking to go from the value area high to the POC to the value area low. This is like a long swing trade thought process because this is a huge range, right? So is it magic? I mean, probably not, right? This is why I'm so passionate about TA and why I love it so much, right? In this case, of course, I did not have my channel back here, but we would be looking for shorts up here, just like we would look for shorts up here and longs down here. Like this would just naturally be where I'm looking for a short. And even if I was looking at it as a scalp to maybe like a local fib level or something, it's like once you get into profit and you move your stop loss to break even, if your money flow is coming out, right, you might even say to yourself, well, you'd probably close the trade here. Well, I would argue I probably wouldn't have been, right? And why would that have been? Well, if you look at your high time frame money flow, well, I have to go back again, right? Let's say you hit the POC, right? You're coming down to the value area low and you're saying to yourself, should I close the trade in full or am I expecting lower prices? Well, look at your money flow here. You already got the bearish confirmations into your key support or resistance, right? Your daily money flow is trending out, indicating lower highs and lower lows. So this would indicate to me that this range is probably going to break down, right? Regardless of a black swan event or any news or anything like that. I would 100% be holding this trade with my stop loss and profit, right? Hoping for a bigger move down because of the money flow indicating that. And what happens? You get the massive drop down, black swan event. So, were you shorting, right? Or would you be shorting up here saying, oh my God, there's going to be a massive black swan event I'm going to short here because I think there's going to be a black swan. No, you're just shorting here based off the technicals, but the money flow is helping you understand that the trend is going to continue down. It just happened to be a black swan. So this is why I say the charts are the truth, right? Show me any black swan event. I get that the black swan is like what's causing the panic, right? But like it does pop up on the chart. Show me any black swan event, and I'm sure we could find one that didn't play out. But more often than not, it's just like you're already in the shorts there. And it's like the black swan, just like again, show me the charts. I'll tell you the news, right? I can't really tell you the news because I wouldn't know what it was, but I could just tell you, like, hey, I mean, if there is news, it's probably going to be bearish news. Now, in the case of a bullish black swan event, a true bullish black swan event, maybe that scams up, right? It's not going to be 100%, but 100%, more often than not, that will be the case. So, charts are the truth. But again, if you're making money trading news, continue, right? I would never tell you to stop doing something that you're making money at, if you're actually making money. But anyway, there we go. I digress. But I think it's important because I think a lot of people here are here to learn, right? Learn how to trade, right? And if TA didn't work, I would not be able to do this. But anyway, let's continue on. Show me the green dot. Shout out to Captain. Green dot, pump it to $1 million. Have we done XRP? Shout out to Blog. Yeah, we did take a look. We did take a look at XRP earlier today. We could do another little check-in here. Bada boom, bada bing. Let's see. I still just kind of sitting around. Still in that same area. Now, what did we look at yesterday on XRP? Do I still have it marked out? Look at that. TI doesn't work, right? Again, I say that jokingly, right? Because, like, again, the point of TA is probabilities, not guessing up or down and going with that 100%, right? It's always a game of probabilities. But what did we look at yesterday, right? Key level of resistance. Golden pocket 786 retracement. We had to be careful here, right? Because if we were to push up, we had the money flow coming out on many different time frames. So when you get this bounce to the upside, with your money flow coming out, I think it was the 1 hour that we were looking at. Money flow comes out. You're looking for lackluster bounces for lower highs and lower lows. And that's where we say, hey, where's that lower high likely to come in at, right? Literally live on the stream last night. Between the golden pocket and the 786, right? Lackluster bounce, lower high, lower low. So there it is, right? And again, it's not going to happen every single time, but nice to see that play out, right? So if this money flow continues out, 2 hour money flow still trying to come out as well. We're just bouncing around this major key level of resistance. This is local, but even if we do push up still, right? If we can continue the overall uptrend and continue up here between 270 and 280. 283, right? Like this is your big level of resistance if we can get back above that local retracement level, right? If we do wind up pushing back up here, we got to get above here, flip this to support in order for me to start looking for higher prices to fill that volume profile. Again, like volume profiles are going to be goated, right? Every single time. Almost. I can't say every single time. It's not guaranteed. But of course, if you watch the show, you know how high probability those are. Even on the example on the C19, right? Like you can just see how well respected that even this profile was. Where was it? I think it was on a different chart, so I didn't have it pulled, right? But like even that profile that we just went over. Let me actually pull it up on the actual chart that we had. I guess I deleted it, right? But if you just look at that, right, not only does it give you the thought process of like where you should be looking for price to be overvalued or undervalued, value area low, value area high, value area, it's like get back in, POC, almost to the value area low. That might have been the value area low at the time, actually. No. But it would have looked different here, but overvalued, undervalued, overvalued. Right? And then what happens, right? This is why I extend these previous volume profiles, guys. It's the best way to trade, in my opinion. Tons of profitable strategies out there, but the reason I love this is, hey, you get the deviation below the low, right? This is the loss of the range. But once you start getting the impulse back up, you know that this is the fair value. And you know that if price imbalances back to the upside, price always seeks fair value. So you can look at this now on the way back up and say, hey, if I flip this value area low, we're probably going to go to the POC next. Once you flip the POC, you're looking to go to the value area high. And you actually front run the value area high here very slightly. You flip the POC, and you eventually tap that value area high. This is what gives you the high probability trades, right? This is how we make the calls on the channel more often than not, right? Like this is the big thing that we're using. So when we take that back to XRP, whoops. What do we have here? Well, We have our value area here. We have the loss of the value area. And again, money flow is letting us know that we'd probably put the local high and local lower high and lower low. But again, that's a lower time frame. But if you wind up getting back into this value, well, guess what? Then you can look up towards the POC and the value area high. Plain and simple. Just like here. Bounce off the low, fill the range in full. Reject the high, fill, whoops. Can't get out, fill the range in full. To the low, get back in, almost fill the range in full. Right? But money flow coming out, lower highs, anchor VWAP, you could be looking for that continuation to the downside. So I would say between 270 and 280 is going to be the big area to look at on XRP. Get back into this range, flip it to support, then we can look for the bigger continuation up. And you might say to yourself, now I'll even give you the thought of the black swan event here, right, with the tweet. Why would you be anticipating lower prices on Bitcoin? I mean, on XRP, right? Well, I guess actually probably not a great example here just because money flow has been so choppy, right? But 3-day money flow generally trending to or starting to trend to the downside right before the drop. You come on down to the lower time frames, maybe the 4-hour money flow. Look at this, right? Your 4-hour money flow is trending out, right? You might even already be short from up here. At that point, you're looking for the continuation down, right? You're already bearish. You don't know if there's going to be a tweet or what the bearish news is going to be. But again, your thought process at this value area low would not be to close your short from up here in full. It would be take profit, move your stop loss to break even or put it into profit, and anticipate a continuation down. Right? Can't predict that it's going to be a black swan and a massive liquidation wick like that, but you would be looking for the continuation down anyway. And if that news is going to come in and hit you by surprise, well, guess what? You're going to get some extra gains on that move. But just like another example of like the chart was bearish here, and there's your bearish black swan event, right? Literally happens 2 days before the news, right? And your short was probably all the way from up here or maybe even from up here. So. But anyway, that's what I look at. 280, 270 to 280 is the big level to flip to support in order to get the bigger continuation up. Until then, it's a chop fest. Maybe we just continue to range down here, right? This is a deviation above your local value area high. 4-hour money flow is attempting to come out here. So these are some local levels you can look at on XRP. You have your value area high sitting at 257, your POC sitting at 240, and your value area low sitting at 229. Golden Pocket POC confluence right here. 786 value area low confluence right there. You lose this 786, I'd be anticipating lower prices. Right? Maybe you get a bounce there to get back into your range and continue up. 786 is kind of your last place to bounce. If you lose this, I'm looking lower. Regardless of whatever news comes out here. But there you go. Trying to get back into that profile here. All right, let's see. Are we still having the 5:45 p.m. Eastern Standard Time live stream? I'm not going to lie. I am inclined to continue to do it. Yeah, we'll probably still be live at 5:45. We are running. We might just have to run directly into it if I'm being honest here. Shout out to BRT said, why the F are we calling for black swans? No, it can't call for a black swan. The whole point of a black swan is that it's unpredictable. Right? People say white swan would be a bullish black swan. I think it's just black swan, bearish black swan, or bullish black swan. Right? I don't like a white swan would just be a swan. So it's like a lot of people call bullish black swans white swans, but a white swan would not be an unpredictable thing. A white swan would just be a swan. So it would be like bullish black swan, bearish black swan. But I guess maybe you can call the bullish black swan a white swan. I don't know. But anyway. Virtuals. We can take a quick look at virtuals. H-bar. We actually already did H-bar in the beginning of the stream. Probably not much to update there. If we look back, yeah, I mean, you're just still literally at the same prices, playing around with this value area high, key support, 20 cents, right? You got to hold that in order to come attack this bigger level of resistance. If you could flip 24 cents, that's your doorway to higher prices. So doorway to lower prices, 20 cents. Doorway to higher prices is really going to be 24 cents. But literally, if you scrub back, we did the full TA on this, just kind of literally sitting in the exact same spot it was in the beginning of the stream. Virtuals, I could take a look at virtuals. I think we looked at this last night. Oh, sick. Oh, I was going to say, where the heck is the TA here? All right, so let's come on down here. All right, virtuals trying to get interesting. Money flow, I would say this is flat. I mean, you could argue it's technically trending out here, but I would say this is somewhat flat. You are above your POC. You flip the value area low. You go into the POC. Highest probability next target once you're above the value area low is always that POC. You can see that right here. We can hold on top of this point of control. Next major target to the upside, guys, is going to be the value area high 205. Taking a look at some of your lower time frame money flow. 2 hour coming out. 1 hour, choppy, coming back into the green, but you did just get a crossover into the red. Man, money flow. 90-minute money flow, trying to come back up. Overall trending out, red dot printing. So I would just be careful here. Let me just see if we have any significant NPOCs. I'm not going to be able to pull them. Let's pull our fib here real quick. From the high to the low. All right, so this is kind of simple. Here's your golden pocket 786. This is the, like, for all-time highs, right? Or not even all-time highs, but to come back up into this upper value that we have up here. I would say you have to be careful, right? Because golden pockets, and this is a big zone, right? I would put more weight on the 786 because it's confluent with your, I would put more emphasis on the value area high because it's confluent with that 786, right? Golden pocket is pretty much what we're tapping right now. So if you're going to put in a massive high, low, lower high, lower low to continue the overall macro downtrend, these are the areas that you would expect it at. Now, taking a look at some of your higher time frames, 2-day money flow is coming up. This is nice to see. Nice clean red wave for the continuation down. Now we see money flow smoothly trending to the upside. Daily money flow trying to cross into the green. 3-day money flow just crossed over into the red. 4-day money flow not looking bad. And then you start to run out of your money flow in those higher time frames. So I would say this is definitely the range to look at. Hold on top of your POC sitting at $1.45. You can push into the golden pocket between $1.69 and $1.77. And just within the volume profile, you could look at this as a potentially intermediary level of resistance just on your longer journey up to that value area high. They're not always clean and simple, right? Like you could even see, they're not always just like massive rips down, right? Or massive rips up. Sometimes it can get very confusing. You get a little rejection, back down to the POC, back up, right? But eventually to fulfill the range, get up, hold this POC. The doorway to the value area high stays open. You just got to remember that you have this golden pocket sitting here. Very key level of resistance, $1.70 to $1.77. It's the only thing holding you back from getting up to that value area high. And then once you get up to this high, this is where you can say, well, hey, we stay on top of this. Now we can look to take out this high and get accepted into your upper value, where you also have key resistance up there as well. But locally, value area low at $1.21, POC at $1.50, value area high at $2.06. Biggest levels to the upside, and obviously the value area low is going to be your key level to the downside. Money flow, a little mixed here. You have your 10-hour money flow crossover into the green. No confluence with your weekly green dot, unfortunately. But those would be the next key levels on virtuals. Let's see. Solana, yeah, we could take a look at Solana. 98K next. Shout out to X24. If we lose the 50-week moving average, I am looking down towards, what do you say, 94? Or 98? Yeah, 97 to 96K is the POC. So I'd be looking right near that level if we wind up losing that 50-week moving average. Shout out to AM6, says, nauseating price action, Frankie. I'm tired, boss. Shout out to AM. I know, bro. It's brutal out here, especially on the altcoins, right? Like, the altcoins are even, like, sketchier. What is Bitcoin doing? 110.4, just still. Oh, my God. Come on. Are you going to do it or not, Bitcoin? Come on. All right, so we took a look at the virtuals. Let me take a quick look at Solana. Let's see. Again, money flow coming out on the 4-hour. It does make me somewhat cautious of a continuation down here, guys. I'm not going to lie. And, still, just like literally at the exact same spot as yesterday. And, like, this is a peculiar place for Solana because you have your upper value and then you have your lower value right on top of each other. Like, this level exactly is the same level. The high and the low is the exact same, right? And this is the doorway to higher prices, but also the doorway to lower prices. So it's like you're just fighting right here. You need to get accepted into this profile to get the push up towards 217. But if you get accepted back down into the lower profile, and again, that value area high and low is sitting at $192, like absolutely critical level to watch. If you lose this value area high, this is the only thing underneath us. Both of these 786 daily and anchored VWAP, I don't mind the anchored VWAP tap multiple times, but this daily and 786 have been tapped multiple times. If we lose this 786, the key level on Solana to the downside, lose 176.92, I am looking for the bigger drop to potentially fill this wick, right? And then you have your POC right underneath you at $141. So if you want the move to the upside, I mean, honestly, like you could just kind of play around between these two levels, right? Like it's not until you lose the 786 that I'd be looking down here. It's okay to deviate a little bit back in here. You might get back up here. Like it might just act as a like super strong magnet, just keeping price clung to this level. So it's okay to come back down in here, but you don't want to lose this anchored VWAP 786 zone. That is what causes the bigger move to the downside, in my opinion. Until then, right, until you see something happen down there, it's like if you can hold on top of here, the next major target to the upside would be 216.79. Just literally right on top of each other there. Yeah, I mean, daily money flow coming out as well, even from like a macro profile perspective. Like, what would the next spot be if we lose this 786 in the larger perspective, right? You have your daily red dot. You have your money flow coming out, looking to cross over into the red. If this crosses red, guys, you got to anticipate the continuation of the downtrend. Where would it bring you to? Right into that same level, same POC, about $142, right? Lose that, your value area low sits at about 125. So you're hoping to stay out of here and continue up. But even from the grander perspective, right, like that next major key level is still $145 to $142. And still, the line in the sand would be losing that 786, right? Because this 786 is from this low to the high. I mean, you could potentially pull it from this low to this high, but low, high, higher low, you would hope for a higher high. You lose this, that invalidates that idea, and you would be, this is the next magnet to the downside, in my opinion. So there you go. All right, guys, I think that is all the time we got for today's live stream. I may go, I don't know. We'll have to decide. It's like we're going to go live and just talk about the same stuff that we just talked about. So maybe, I don't know. I think we'll be going live tonight. If you guys, you'll see the turn on your notifications so you know. Everything looks like shite. Shout out to Jay. Shout out to JC. Yeah, I mean, I'm not loving the money flow, if I'm being honest. But with all that being said, guys, we've been live for almost 3 hours here. So I got to hop out of here. With all that being said, thank you guys for tuning in. Camera going crazy. That's all the time we got. Thank you for tuning in. Shout out to Atma. Shout out to Sheesh. Shout out to Blackie. Shout out to JC. Black. Shout out to BRT. Shout out to Captain. Shout out to Chewy. Toll. Frankie Candle's in the chat, dropping a link there. Shout out to Matt, Jesse, everybody in the chat. Thank you for tuning in, Mafia. I will see you maybe, I think, at 5:45 p.m. Eastern Standard Time. If nothing crazy happens, I might just take the night off, to be honest. People could just rewatch this live stream, or maybe I'll drop a market update. But until next time, guys, I will see you later. That's all I got. Hasta pasta. Shout out to Mystic Ruin and Jedi Skirk. Frankie Candle's out. Bing bong!
Here we go, at the top of the class on a roll, and it's time to run it up, yeah, you know. Maxed out, put the pedal to the floor, ayy, on the road, here we go, yeah, we winning by a landslide. Never see me coming, I'm a landmine. Yeah, I ain't taking orders in command, like, yeah, you about to see me on demand, like, you know, on demand. If you ain't know, you about to understand. Yeah, I got the team by my side, right hand. Yeah, take it to a string, you ain't seen it like that. Yeah, and it's the dream, and we coming for the bag. Yeah, and we ain't ever going back now. Future expedited, now we on the fast track now. They won't lend a hand, now they see us on the map now. It's time to act out. Here we go. At the top of the class on a roll, and it's time to run it up, yeah, you know. Maxed out, put the pedal to the floor. Hey, on the roll, here we go, yeah. At the top of the class on a roll, hey, and it's time to run it up, yeah, you know, yeah. Maxed out, put the pedal to the floor, yeah. On the roll, here we go, here we go. Here we go, at the top of the class on a roll, and it's time to run it up, yeah, you know. Maxed out, put the pedal to the floor, hey, on the roll, here we go, yeah. At the top of the class on a roll, hey, and it's time to run it up, yeah, you know, yeah. Maxed out, put the pedal to the floor, yeah, on the roll.